Uh, all right, Gerry, we're live. Welcome, everybody. Another Sunday here for options. I mean, we don't have to talk about options. We can talk about whatever you want to talk about. Talk about stocks. We're probably pretty good on stocks, but if you want to bring up some of the stuff we're not good at, like SPACs and spiggity SPACs and what else, Gerry? Penny stocks,
Yeah,
crypto. We're not really experts in any of those.
we're not
So,
experts. We might tell you that it sucks or something, but we'll give you
yeah.
our honest opinion.
That's true. So I mean, yeah, whatever you want to shoot in the comment section. I don't have an agenda here. I just, I'm going to talk about my week a little bit. Maybe talk about your week. I mean, last week, I think we talked about that we took, some losses. That was kind of something we just wanted to do on our own and just take the loss. Weren't really forced to take the loss. I think I took like what, $2,200 or something like that in losses. And then this week, we had a pretty challenging week, but because of the prior weeks to that, I kind of positioned myself to be able to account for, a pretty good move down, I'd say. And so I didn't have quite as much tech on, didn't go quite as heavy on the buying power. Ended up making back, I think like $1,500, actually more than that. I'm positive now, so I'm like literally up $300 for March now. It's not, it's better than being negative, right? But it's a far cry from the $4,000, $6,000 I had been making. But that's fine, like I said, at the end of the year, that's all that matters. You're positive at the end of the year, preferably, around your 24% that I'm trying to get. I'm still on track for that, right? Because 3 times 4 would be 12. I'm already up more than $12,000 for the first 3 months, and we're not done with March. So I do expect to end March probably, plus maybe about $1,500. So that's not bad actually. Added a new rule or two, and got safer, and kind of accounting for this strange volatility we've been having because of interest rates or the notes and or the treasury notes, and some weird things have been going on. Jay Powell and his weird, stuff he says and all that. But I'll probably make a video on this, but I'm probably gonna abandon the whole VYM covered call strategy. So hasn't been working very well for me. The last 2 times I put it on, it's been challenged both times in the money. Not substantially in the money, maybe 70 cents at the most or something like that. But I was down another $700 just literally on Thursday, and then Friday came along and it dropped down even more, and I got lucky enough I was able to buy it back for like a $50 gain or something like that. So I think it's a flawed strategy. Now it's a good thing, kind of like Gerry said before, because I do own the shares. I do own 900 shares, so I'm actually, I'm up there, but I don't want to have the $18,000 realized capital gain. So that's the reason why it's just a flawed strategy for me. You try to get safe on there. The problem is you get safe and there's no premium there. So you want to come down to the next strike or something like that, and there's a little bit of premium there, but it's obviously more risky, right? So it's just me challenged. So I might be looking for something else. Don't quote me on it, but I'm looking into XYLD. So but we'll cross that bridge at a different time. So let's go ahead and let Gerry do an intro and maybe talk about his week, and then we'll do some shout outs here.
Yeah, so I had a decent week actually. It felt slow. I don't know if it felt slow to you, but it felt slow to me. Um, I probably cleared about $600 in option income for the week. I'm still down big time for the month, only because of a big roll that I had to do in ARK-K out to April. So I'm digging out of that hole. I might end the month flat, which would be nice. Even if it's a couple hundred down, it's still fine. I'm still, well up for the year, so it's not a big deal. I've been getting into weird positions. Like you, I've been kind of light on the tech. So I'm getting into some strange positions that I never thought I had, but I guess this is part of it. I've only been doing this for 4 or 5 months or something like that. So I guess pivoting when the market turns to different sectors and things like that, as sectors come in and out of favor, is probably going to be, the norm. So, I think I have only a couple things tech, like Okta. I'm in Okta. What other tech am I in? I don't think I'm in any other tech, but
I've never heard of Okta.
never heard of Okta. Yeah, that's what I'm saying. I'm in some weird stuff.
Throw away your scanner.
Yeah, that's probably what I should do. But a lot of things, it's kind of catch-22, because you want to get safer, right? But you get into some of these, big stocks, big names, Pepsi's, Johnson and Johnson's, and things like that, and there's literally no premium there. Even Apple,
Yeah, there's a little bit of Apple.
There's premium there, but it's
Yeah.
not, it's not juicy premium. So, I had a good week. I'm running pretty, I wouldn't say heavy, but I'm running like mid. I'm probably 40, 48, 50% going into the weekend. So we'll see how it goes during next week.
I'm just running a query here through my spreadsheet to see what I actually made last week. Just curious, because it was a pretty challenging week, but obviously it doesn't want to adjust on me. But I don't know if you can hear me or not. $1,500. So I made $1,500 last week. That pretty much covers most of the issue that I had the week prior, right? There's some good questions here. I'll get to those here in a second. But you touched on a thing where, we didn't put a lot of tech on, but obviously with the tech wreck we had last week, I started putting more tech on, because it's hard not to take advantage of certain things that are down, 6%, like Visa was down like 6%. I don't necessarily call that tech, but, I'm like, why not put a Visa on? You can get down to 180 for some decent premium, right? It's just, you don't necessarily want to wait around with a bunch of capital waiting for that down day, but you want to take advantage of it too. So maybe kind of split the difference between those, not have everything on, but it is what it is. I took advantage. I got 4 TQQQs on for different expiries, plus there are multiple contracts. I got a bunch of QQQs on, and you got to take advantage of it. You know what I mean? So, but I wasn't. But right now, with all that on now, and actually being down and all that stuff in the triple Qs of the NASDAQ, I'm 50% utilized right now. So it's still better than where we were in February. You know what I mean? Okay, let's do some shout outs. Dan, welcome. It looks like you've been hanging out with your kids out at the parks and stuff. So, you got the good life there.
He was here early.
Yeah, all good. Welcome, all good. Hopefully you got your situation figured out with your taxes, with the OF. Tam, good evening. Let's see here. Wongster. Okay, so he's responding to probably what I had said. Yeah, I guess I could wheel it, but the problem with wheeling it is it doesn't mess with my head. It messes with my spreadsheet. That's the problem. And it just shows a negative and all that. Like, I don't like to push gains off to the next month. It just makes that month, kind of look shitty, right? Like, that's just it's a mental thing, I guess. If you rolled like 4 or 5 positions, that could be like, a couple $1,000s, right? It's going to get pushed off to the next month. As Randy always says, all of this comes back eventually. And it will, but it's just, it's a mental thing. So I'd rather just, well, I got lucky enough that it just came back under the money and I was able to just buy it back. Now, granted, if I just held it for another 2 hours or something like that, it would have expired out of the money. But why not just lock in the profit and then, not have to worry about it instead of it, having a run at the end of the day or something like that. So, Stock Ninja, welcome. And Adrox, I think is how you pronounce that. Welcome. Charlie, welcome. I don't know if I'm supposed to use your real name or not, but welcome. I think you even say it in your videos. So, Christopher Blaine, welcome. Let's see, selling. Oh man, let's give this guy a thumbs up and an applause. Let's give him a golf. Here we go. Golf clap right there, just for you, buddy. Get out of that SPHD.
It
That's
pays monthly.
yeah. There's better. Well, doesn't Jeppy pay monthly?
It does.
Well, there you go. SPHD is like it's the garbage of the garbage. No, I mean, I'm going to caveat because I always say this, but if that's all you have and you've never invested in anything else, then it's better than nothing. I'm going to give them that. But it's
If
just
if
it got pushed by some
SPHD keeps you
I think it got
motivated,
pushed by some. Let me see. Did it get pushed by some YouTubers?
yeah, I don't know who but if SPHD keeps you motivated to be in the game, to be investing for yourself, then I don't have a problem with it.
That's basically my thought. It was total bullshit though. It's not low volatility.
It
was low volatility during a bull market, right? But then once we had the crash and all that stuff, they really need to rename that now to high volatility. So, or underperforming, or I don't know what they need to name. They need to rename it to something else. Yeah, I think it got pushed by a bunch of big YouTubers or something like that, and it just made its way around the whole community. And when I looked at it, I'm like, okay, this is junk, but it's better than nothing. So we'll give them that. I'm glad you're getting out of it. I think Jeppy's a better bet. Yeah, Jeppy's a better bet.
More quality stocks in there for sure.
Yeah. Theta Trader and Corp, welcome, buddy. He or she. I always make that mistake. Them. Let's call them them. Let's see. Randy, welcome. You look good last night. I didn't hear any swear words out of you, but apparently All Good said you had a couple that came out, so I missed them. If you want to open a brokerage account under an LLC, what will the broker ask for? They're going to ask for your articles of. They're going to ask for the two. Well, I got them right here. Let me get them for you. Articles of organization, I think is what it is. Online business. I'm going to ask for. God dang, where the hell are those things? Here we go. They're going to ask for the operating agreement and the articles of organization. That's what they're going to ask for. They might ask for the SS4 too, which the SS4 you can get for free. Just go on to the federal website. That's how you get your EIN number. So those three documents, most likely just those two, and they might ask for a business checking account or something like that, maybe, but I'm not sure on that one. But they should ask for those, at least those two, maybe the EIN, but I think you're just going to have to put that EIN in. Okay, so and I don't have a business account yet, but I will. But I've opened an LLC, and I know what they're going to ask for because I opened a business account, a business retirement account with them. Anyways, let's see here. Enrique, I closed all my positions before the FOMO. I was going to say FOMO, but
that's how I read it.
FOMC meeting last week. Next week, Powell will speak like 3 times. Did you so you closed it before the meeting, and the market shot up after the meeting, so you just literally missed out on probably a pretty good. I mean, it is what it is. I mean it's almost like you're day trading, right? Like you're trying to time the market. You just missed out on a pretty big run after the meeting. Now, granted, I mean, most of the time it just goes up and then it comes right back down to right where it was, but that wasn't the case this time. But I mean, I'm not saying that's a bad move. It's just, I mean, you almost need to stay invested though, because you don't, what if there's something comes out where it's just all good news, right? Like it's just as good as, or just as bad as being out and going. I don't know. What am I trying to say here, Gerry?
Well, you can miss the run just keeps running. Like, I mean, he can speak 3 times next week, and it could just run each time he speaks. So, are you ever going to get back in?
Let me use this as a good example. I got out before the 2016 election, okay, because I thought for sure Hitler was going to win, right? And she, it was like 12 a.m. or something like that, 1 a.m. And I'm like, Trump won freaking Florida. He won, Ohio. He won some really key states. I'm like, oh my God, what the hell's going on? The market was down like 1,000 points or something like that. in the ES. The ES was down 1,000 points, or maybe it wasn't the ES. That's too much of the ES. So the YM was down 1,000 points. And I'm like, oh my God. And then literally, I think it was 2 a.m. or something like that. I'm talking about Pacific time. It's 2 a.m. Eastern. So was it 2 a.m. Eastern? I don't know what time it was. You all know. Anyways, the market, like by the time I woke up the next day, it was like 6 a.m. or something like that. Market was up, and it was up big. And I wasn't in the market. Like the market just shot up the day he was elected, it was just shot up, for how many months, years? You know what I mean? I missed out on a lot of that. And I don't think I got in until like 2017 or something like that. Well, obviously 2017 was only a month away, but so I missed out on a pretty good run. I think it was at least a 10% run or something like that. So I don't know. It's almost better to be like to have some money on the sidelines waiting for it, but not all the way out.
Yeah.
Got to get me some V tomorrow. What kind of V are we talking about here? We're talking about Visa, right?
You were going to say that.
Do you know me too well, Gerry?
Dang it, Dave.
You know me too well, Gerry. Well, I mean, that's the first thing that came to my mind. Like V. Oh, okay. So about yeah. Yeah. If it unless it shoots up 4%, pre-market or something like that, we still get it.
It could.
I mean, yeah, the 180. The 180 is a good number for Visa right now. Let's see. Made some money on TQQ options call. What strike did you have, and what expiry did you go with? I've been sprinkling those suckers out.
You sold a call?
Did I say call? Oh, wait, call. Yeah, maybe she owns it. You're right. I didn't catch the nuance. I've been doing puts, so I got a bunch of puts on. I got puts. I don't know, 4 different expiries now or something like that. So
yeah, I got
April 1st, April 16th. I got June 18th. I got like 4 on to June 18th. Those are like 35 and 40s. And then I got those April ones out, like 60 and 55. So those, honestly, those are, I'm liking those right now. Let's see, Wongster. Didn't SPHD have more tech? What's NOE?
Now, I think he's saying now. But yeah, they have a few positions. It's probably something like IBM and Cisco, something like that. Some old tech.
Intel, IBM, Cisco. They probably got IBM in there. IBM's aristocrat, though. You got to give them that,
Yeah, I mean, that's a good company, but
it's normally the redheaded stepchild is what they have in there.
Right.
The Comcast and shit like that. The UPSs or something.
No, I don't think they even have UPS.
Well, that's surprising. So what you're saying, UPS is too good for it?
Yeah, I think so.
Oh man. Well, what do you know what the requirements are for that one? It's just low volatility, right? Over like
it's just low volatility. It has to
out at this point if they went through those rules.
It has to have high dividend, and they measure a number of years, and the price movement. That's it. There's no other qualifications of rising dividends or increasing dividends or none of that.
What if like their rules like kicks out like half the stocks? I mean, there's not that many stocks in it to begin with. It's like 50 or something, right?
Yeah, it's 50, but the stock pool is actually, from where they get that from, is actually about 100 plus.
Yeah, but I'm saying, like, if we have volatility, VIX goes to 60, goes back down to 20, goes back. I mean, it can kick all those suckers out of there. You know what I mean?
There's going to be something there that's
okay, 5 stocks,
But no, I mean, it's there. There's going to be there. It's just whoever exhibits the lowest volatility, even though it might be high volatility, if they have the lowest of the highest, if that makes sense.
Oh man, give me a break.
You see what I'm saying? So
no redheaded stepchild is just not as red, huh?
Yeah.
Okay, gotcha. Roast session. Yeah, I know. God, that's probably why we got a thumbs down, huh, Gerry?
Probably.
They knew we were going to talk about SPHD before we even started the stream. Hi, guys. Nice to see you both again. Hey, welcome, MDB. Sounds like IMDB, huh? That's what comes to my mind. IMDB. Let's see here. Laughing at me all good. Must have been some, OF comment or something. Proof of address and your ID.
That's probably for the LLC thing. that
Yeah.
Randy was
I
talking.
was be surprised they don't ask for they might not ask for those, or maybe you have to upload them. I don't know. I don't know. I mean, he just did it, so maybe he's right. I can't give that much credit to Stock Ninja, but he owns a fucking BMW shirt and jacket. Doesn't even have a BMW. But V6 Mustang. Okay. Hit the up button, please. Yes, thank you. All good. Do either of you have any tricks for automating your cash secured put sales? Um, well, I mean, automating them. Well, what broker are you using first? You know, I mean, are you just talking about automating the process, or you actually mean talk about like putting the actual, position on and all that stuff, without even being there, like literally a scheduled task?
Yeah. I mean, you can schedule orders, but you
Yeah.
know,
Because I mean, I could talk about the Theta Gang, I could talk about that script, but I just need to know what broker you're using, and because not all brokers are going to have APIs, so that kind of limits you a little bit. But let's see here. Do you typically sell cash secured puts only on bad days? No, I sell them. I sell them on every day.
yeah,
Sometimes, yeah. What's
there's
that?
going to be a sector. There's going to be stocks that are down no matter what. There'll always be an opportunity for you. So
And lately, it's been either the NQs, the Nasdaq's been down, and like the YM, the ES has been up, right? And vice versa. Those are down and the NQs are up. So you can look at the other indices during that time, right? I think Stock Ninja picked up Spotify, or he picked up Shopify or something last week. I think it was Spotify, if I'm not mistaken. And I looked at it; it was down big, but Visa was a good one. Like, I think they're getting investigated or something. Honestly, stocks that are getting investigated and stuff are like the perfect stocks to pick up because people have short memories. It's like a goldfish. They swim from one end of the freaking fish tank that's this big and they forget where they came from, right? So it's the goldfish mentality. Remember Target, the credit card chip thing, that debacle back in 2015? I
mhm.
picked up a boatload of Target in the 50s or whatever. And now look at Target. I mean, it's just a perfect
Yeah,
example. They're getting investigated. Remember when Fuckbook got investigated or whatever, and he had to go to freaking Capitol Hill and look like an idiot on the stand and all that crap. Perfect time to pick up Facebook, right?
yep, yep.
So yeah, I think stuff like that it's a good opportunity to pick it up.
Also, what I do typically, um, I have a watch list that I create, and I use all the spider sector ETFs. So I have that in my watch list, so I can look at it at a glance and see which sectors that day are not doing so good or are really hot. So, if something's not doing so good, I can research stocks in that sector. So that's
You can
one thing
also
I.
use FinViz too. They have the sectors broken out with a heat map, so you can literally see like all the biggest stocks in the sector and how they're doing. But if you see sprinkles of almost all red in that sector, it's pretty obvious to tell. But Gerry has another way to doing it as well. So, um, when your position expires in the money, can you explain the process for us rookies? Are assignments done automatically by the broker? Well, this is the thing is here. I know you didn't say it here, but I know you're doing a covered call. Um, so they're gonna your shares should be gone on Monday morning. Your shares will be gone. That matter of fact, they're usually taken out overnight, like on Saturday or something like that. So I know you were in a cover call because you left me a message specifically about this. You didn't mention it here, but on a covered call, it expires in the money on Friday, and I guess apparently options goes till like another hour and a half or something like that after the market closes. So technically, it could actually have fallen out of the money, but most likely VYM is not going to. But because he's in VYM here, he didn't mention it here, but he's in VYM covered call. So those shares will be gone on Monday morning. So you're gonna have the money to deposit in your account, and then you can start whatever you want to. He was wheeling, so you're gonna wheel something else. I recommended QQQ. Look at that one. Our assignment's done. I'm gonna go. If you were doing if you were doing a CSP, for example, here instead, then on Monday morning, if it was, I could take that back. On Friday, if it, expired in the money, by the time Monday shows up, you're going to have the shares are going to be in your account. 100 shares of that stock are being in your account. So it's just the opposite. Or do I need to transfer the money to stock? Nothing has happened so far. I don't know what broker you're using. I think you're using probably my get. Wait, I can't remember the name. What's the Chase one? What's the name of that Chase one?
It's called U-Invest.
Nah, it's not that. I can't remember which one he's using. Yeah, I don't know. He's using some funky one. I think the one that Ryan, Independent Investor's using. One of the ones he's using.
Merrill Lynch.
No, it's something else. Anyways, so I don't know how that broker does it, but most of the time, it's literally overnight on Saturday. That's when they're gone or show up. That's when I have always seen them. But, I guess it really doesn't matter as long as it shows up by Monday. So
yeah, I mean, it definitely. I'm with Fidelity, and just yesterday, Friday, my Kroger shares expired in the money. My covered call, so my shares are gone, and I have cash sitting there, so ready to do something on Monday. So usually on covered calls, they are done automatically by the broker. We did find, now this is going kind of out of the scope of the question, but when we did PMCCs, we found out in Interactive Brokers that you were assigned short shares. So it's different.
I'm assuming that's probably the case for every broker, though.
It probably is. Yeah.
Yeah. So if that's the case, because I had to do this, by the way, I was running in the paper account. They expired, and then it put me in negative, 1 or 200 shares or something like that. So I just went in there to the long call, the other side of the PMCC, and just right clicked on it and say exercised. And then it satisfied those short shares and took everything out. It was gone. So you had two options there. Yeah, really had three options. You could have bought it back before expiry. You could have just bought those short calls, it's short stock at this point. You could have bought those short equities back, or you could just exercise the long call, and that will satisfy it. So I'm assuming that every broker would probably treat it the same. But going back to this one here, I'm assuming that the broker is just one of those brokers that just doesn't update frequency. Maybe they're doing maintenance over the weekend and they didn't get to it. They do it on Sunday night or something. I don't know. But Monday morning, this should be there. So you can tell us if they are. That way we know, because everybody's using different brokers. They all act differently sometimes. But it should be there by Monday, by the time the market opens. Yeah, how you go? Hey guys, what would you trust more? An ETF like JEPI or a monthly payer like well, I mean, JEPI probably, because it's like kind of like an ETF, right? I mean, it isn't. O is just covering one thing. I mean, granted, O is kind of an ETF in itself, but in real estate, but it just covers like a subsection of real estate, though, right? Like commercial real estate-ish. Yeah, I don't know. What about you, Gerry? What'd you go here? To me, this isn't really a comparison.
It's not. It's kind of like, apples and oranges. So, I'd say trust more. I would say JEPI, just like you said, just because of the diversification of it. You're invested across numerous sectors, and you're not just exposed to real estate. So even though O is sort of like Dave was saying, they're invested in across all different sectors as well, but it's still just real estate.
Yeah, and it's almost all commercial real estate too. But I mean, O is literally the cream of the crop though for real estate REIT. But I mean, oh man, I got a frog here. Hang on a second.
Can't have those frogs.
Must have the beer virus, man. Jeez. Okay.
You gotta have me getting water now.
Yeah, well, I have my tea. I got my other thing here, but yeah, JEPI and O, it's just there's no comparison there because they're not even. You almost want to own both, right? I mean, you want to own both really, because you want to have some real estate, right? So to me, it's not either or. Good evening, Jamie. Welcome. Sold a call. Okay, so she sold a call.
That's
So what was the question? She was in the money or something like that?
no, she made money on it, but selling a call is against TQQQ is kind of
Here, oh, right here. Made some money on TQQ option call. Yeah, I don't know.
Did
You
you
got, you
did
got a
you
bigger
own the
nutsack than
shares
I
or you just
have. Jesus.
yeah,
Um,
that could
man,
be that could go
yeah, you don't want to. I don't know how far above you gave it to. How much runway did you give that thing to move? I'm giving, I'm giving like TQQ like a 50% move down, and you probably more than that. I think. Let me see. 60% on my Junes, 54% on another June. And for my short one, like the Aprils, I'm giving like a 30 and 36% move. So that literally allows for the market, the NQs to move down about 10% in about 2 weeks. That's probably not going to happen, but it's honestly, if it does, that's fine. I don't mind actually owning TQQQ. That's the whole reason doing it. But a, a call, I don't know if I'd ever run calls on it.
yeah, I probably wouldn't
My question
unless
is, what was the risk
unless
to reward on it? Obviously, the
yeah,
risk is literally unlimited, but what type of premium did you get? Tell us what your strike was and what your expiry was. We got to look this one up.
maybe sell a call if it fell a lot and we got to sign some shares. Maybe you sell some calls then.
Covered calls?
Covered calls, but
Yeah, not uncovered.
not uncovered. Yeah.
No. Well, she didn't really say it was naked, but tell us, Tam. Tell us whether it's naked. Tell us whether or not what. Tell us your strike and your expiry. Um, Sell put on. Yeah, I've been doing it, Longster. I got, like I said, I got 4 different expiries and a boatload of contracts on, going all the way out to June for some of them. To
Same.
me, that's like it doesn't require a lot of buying power. It's like 25%. So and the premium is pretty good. And it's not honestly, it's one of those ones you could. I literally buy them back too. Like when they're up 30 or 40%, I just buy them back and then just do it all over again because of the volatility. But you been playing with those ones at all, Gerry?
I have a few of them. I think I have a July, a September,
Oh, you're
like a
pulling a
couple.
Matt Money here, huh?
Yeah, I'm way down there though. I'm in the like $15 strikes.
Oh, 15. You got to go out past June. Yeah. Let's see here. Usually the broker will take care of it on Saturday. Yeah, exactly. It's usually overnight, but I think he's in Merrill Edge or something like that. So Merrill Edge, is that the one you said, Jerry?
Yeah, maybe first trade.
Yeah, I don't think it's first. I think it's Merrill Edge. So Merrill Edge, I don't know if he's in that, but I just remember some weird broker that I never heard of. Let me see. It's not a mainstream one like Robert Hood. It should be, yeah. I mean, it's just those, like a Chase. Like a Chase probably wouldn't update, who there probably some off the wall thing, up overnight or 5 a.m. freaking Monday morning. Can you give us some rules or guidelines that you follow before you decide to sell cash secured puts? Oh yeah. Well, I should get out this big old notebook I have of rules. I mean, the rules have changed a lot over the years too. It used to be, okay, I'm only going to sell on down days. It's like, it's just, it's not practical, rules. Okay. I try to separate the sectors out, not have everything on just one sector now, right? Try to keep the buying power at 50%. Because a good down day in the market, if you're at 50%, a good down day in the market, like 2% down, it'll push you to like 65% sometimes, maybe even higher than that if you're an all tech, right? Or if it was just a wide, broad sell off that day, then it still push you over, right? If you're still spread out, not to be in a bunch of meme stocks. Be careful on the naked calls. Don't really. There's just a boatload of rules. I mean, you'd have to come up with your own rules. Learn from other people's rules too. If they add a rule in, then learn. Maybe you want to put their rule in. Try to. I think a new rule that we put in is like 20 billion and above. Try to stick with those and above. No micro caps. No small caps. Technically, I think 2 billion and above is mid cap, but we're trying to, we're not as bad as Stock Ninja. We're like mega cap, So maybe you want to list off some of yours. I'm probably forgetting a bunch.
I do sell some small cap, but what are some of my rules?
Forgot them already.
Forgot them already. I spread out the dates. I try not to put on too many that are going to expire all at one shot. I try not to put too many contracts on one stock itself. I don't chase premium. I try not to anyway. Not saying that I don't, but there's sometimes that I do. Sometimes you get lucky and get out of that, but sometimes you can get burned.
Average, give you a little support.
I skip earnings. So if earnings is that week, I skip that week and don't sell it. I'll wait till after earnings are announced, and then I can see where they go from there. And if they shoot up, oh well, I walk away. If they go down, then I look at selling a put. Yeah,
I could do the same thing. That's the best strategy, in my opinion, for earnings. Don't play through earnings. There's always somebody that's going to miss earnings. There's always somebody that is going to tank on good earnings, and so just play it after earnings. Get it, if it goes down 10%, open some puts way below that, right?
Yeah, I just don't get why guess if they're going to beat or miss earnings. You don't have to guess. You can find out and then play it.
Yeah.
So
I like that one.
Good guidelines.
I'm sure we have a bunch more, but everybody has their own, and you're going to come up with your own. Like you adjust them, you add ones, you change them, you take some ones off that just, I don't know. Welcome, Gerry's wife. Let's see here. Tam, these were my results. Fantastic. Your order to sell to close one contract. You 92 call. And fill at an average price of, holy cow, that's a crap load of money.
Wait, $92 call? How much is TQQ? Isn't it in the high 80s?
What are you doing at the money?
Yeah, that's what I'm wondering. I'm like, oh man.
Was this a covered call, Tam?
If it's a cover call, then it's our surprised faces are moot.
It's a moot point because you probably actually lost money, but I mean, you didn't lose money. It probably just shot up past what your strike was, which is fine. But if you're willing TQQ, and that's what I'm assuming you're doing, my guess is you weren't doing a naked call here. I definitely wouldn't recommend doing it on TQQQ. Mm-hmm. That's like, that's bigger than Randy nuts at this point. I don't even think Randy would do that. I was just trying to pull up what is the strike on, or excuse me, what is the price on that right now, Gerry?
I thought it was in the 80s, high 80s.
Let me look here.
If I recall correctly.
TQQQ. Yeah, 86. So
that's riding close to the sun if that's a naked call.
Yeah, I like to be out in Pluto sphere, honestly, with that one. I probably just need to get lower in the chat, but if you haven't said yet, tell us whether it's a covered call or not. So it's the 319, so basically a month out. I don't know what you put it on, but TQQ 92 call. Yeah, that's some good money though. I think it's a good wheel strat. I mean, I wouldn't mind wheeling that one personally, but I don't know. I guess I'm just not there yet.
I'd want to go to the put side first.
What's that?
I'd want to go to the put side first.
Oh, absolutely. Yeah. Does a toy? I don't know. I don't think so.
As long as it's not an automatic.
Yeah. Yeah. No automatic. Let's see here. MDB Interactive Brokerage is the broker I use when I asked about selling cash secured puts. And
that's when you're talking about automating.
Oh yeah. Okay. So you look up the GitHub Rich Gang, not Rich Gang. Shit. Theta Gang. Actually, matter of fact, I'll put the link in there. If you're, if you have any coding ability anyway, it's already done for you. But, if you want to know what it's doing or you want to modify the strategy or something like that, then you need to know Python. But I'll put the link in there. I'm testing it out in the paper account, and it's already generated a profit. I was already running it through one of the courses, literally like 45 days already. So far it's been pretty good. Let's see here. Got to scroll down. Okay, here we go. So yeah, look up that Rich Gang. Still, I call it Rich Gang. Damn. Look up the Theta Gang bot or whatever. It's not really a bot, but what it does is wheels, but it doesn't have to wheel if you don't want to. And it runs against the API on Interactive Brokers. And you need Pro, by the way, to run an API on Interactive Brokers. That's fine. It really doesn't cost you anything anyway. Not if you're trading enough anyway. Yeah, it was Spotify. Okay, so he had Spotify. I did see it down that day. I saw him got into it. I'm like, I'm not getting into that. Interactive Brokers, when you go to sell a cash secure put, can you please explain how you pick and experiment with premium sales price and order type? It's always limit order for me.
Yeah, limit order and just walking down from the highest number. That's
actually
how
watch my PMCC video, because I literally show you how to walk it down and walk it up in that video. Yep. And that's what I'm doing for all my CSPs. That's what I'm doing if I was doing naked calls and all that. That's exactly what I'm doing. Most of the time I'm doing 5-cent increments. Sometimes when it gets close or something like that, I might move to a 1-cent increment. But if there's a big spread, I'll do it in 5-cent increments. But look at that PMCC video. Gerry has some too. Do you show any walking down or walking up in there?
No, I don't think so.
Okay. I do have it. I do show it in that video if you want to watch the PMCC video that I did. That'll tell you exactly, or it's so much easier to watch a video, see somebody do it, than for me to explain how to do it. Let's see here. What do you think stock holding long-term price? What do you think stock holding long-term price? $4 to $5 USD per share. I want to hold 3 to 5 years. Is he trying to find a stock that's $4 to $5? Is that what he's saying? It's better to buy shares itself or better to buy leaps? What do you think? Stock holding long-term price.
So it sounds like he wants to own the stock long-term. But is it better for him to buy the shares outright right now, or to buy maybe some 2-year call leaps?
Oh, that's it depends on the stock. Because if I'm going to buy leaps, I'm going to buy something. I hate saying this because this is no sure thing. I'm going to buy a sure bet, right? I shouldn't say that because there is no sure bets in investing, right? But I'm going to buy something that's going to get me a profit. God, I shouldn't say that because every stock bias should be up, right? Everything should go up. Stocks only go up, right? But that's not the case. I mean, you could buy, there's stocks out there where, to me, a leap is it's just not something I would buy a leap on. I do own a snow leap right now. That's the only leap I own right now. Okay. And I'm underwater on it, but had a bad day last week, but
if it sounds like you want to own this company. So if you want to own the company, own the company. But as far as
it, then
sell puts against it. But as far as leaps are concerned,
give it a little bit of a move down, and then you own the stock, and there you go. Covered call it if you want, or just own it.
Right. But as far as leaps are concerned, you could get control of more of 100 shares of it cheaper than you would buying it outright. But you have a time expiration there, so that could be that's a risk in a sense.
It depends on the stock. Yeah, it depends on the stock. I mean, just because you have like a high strike on a stock doesn't mean you can't make money on a leap, right? If you're way out of the money on the upside, you can still make money on it. The delta is going to be lower. You're not going to make as much money as if you were selling it right at the money, but it's cheaper to buy that way out of the money leap than it is to right at the money. It just depends on the stock. That's the problem there. Like I could probably tear you a new one, if it's some crappy stock like GME or something like that. Or it's just it's an NIO or something, because to me, like, you're just at the liberty of whatever China wants to do, and they can rip NIO down to zero or down to $1 if they want to. Look just to what, a year ago, 2 years ago, they did the same thing. Look at how far NIO dropped literally in like 1 day or 2 days or something. I'm not sure what frog legs are. Oh, frog hair too.
Frog hair tea. That was your frog throat.
Oh, jeez. Jamie with the freaking. I thought I was, coming up with some jokes here, but let's see. I had a CSP on ExxonMobil that was in the money. Jesus, how long of a freaking expiration did you do?
Well, energy took a hit Friday. I think it was Thursday or Friday. It took a big hit Friday.
Well, it took a big hit all week.
Yeah, I didn't notice it until Friday.
It's just doing its normal thing. Yeah. It looks like it might come down to like probably test that 50 period moving average around 52.50. I think energy is a great place to be right now, in my opinion. So I had a CSP. Yeah. So you're worried about, are you going to get assigned, or I mean, did you take the shares, or did you close it down on Friday? So it was Merrill Edge. So yeah, I don't know how Merrill Edge works. I just know they're just not a mainstream broker, so maybe they just do things on Sunday night or something. I don't know. But by Monday morning, it should be there. It's just my guess. Tell us if that's not, though. Yeah, tell us either way, because that way we can report back and say, this is how Merrill Edge works. I gave it 2 days and watched like a hawk.
We're getting the good stuff. She bought the call. So, okay, that's a little better.
Oh, yeah, bought the call. So you're a day trader, is what you're saying.
Yeah, that's better. That's better than selling the naked call, because buying the call, your max loss is going to be right there. What you say, 226 per share.
I mean, God, haven't been a day trader. If you can catch the market, if you can catch the NQs, right, when it's down 2%, I think buying a call out a week was probably okay. I think the odds are more in your favor than they're not, right?
Yeah.
But it's still it's still risky. I mean, it's almost, chalk that money up to a loss. Like, don't invest more than you can afford to lose in that case. It's literally like gambling. That's what it really is.
No, she didn't lose. She looks like she doubled her money.
Yeah, I'm just saying, but it could have easily just went down, or it could have easily
gone away.
Yeah. Right?
Yeah.
It's because she bought it, so she's buying premium. It's not, the odds aren't in her favor. They're out of her favor. So, yeah, I don't know. I don't think you've ever really day traded options before, often, Gerry. So, I mean, that's a complete gamble. Yeah. Anyways, she made good money on it, though. Let's see here. When the market dropped 2 weeks ago, I got it assigned, and I put option at 56 strike. The stock now is, yeah. Any idea what I can do? You Thumbird say average down, but
yeah, that's you wait, you average down, you sell for a loss. Those are kind of your options there, because that's a little too far out to be selling covered calls.
Yeah, I'm just looking at NIO now.
I think it's in the 40s, low 40s, I think.
I don't know how aggressive you were on the put to begin with. If you're like, what do you call it? If you're like, all good aggressive, because she loves that juicy premium, then that's what's going to happen. You're going to get assigned, and your strike's going to be too. Your cost base is going to be too high, and you're not going to be able to sell any. I bet you the premium is still pretty good, but it's probably not. Let me see. That's a pretty big difference, huh? Yeah.
Yeah, I don't think
I don't have to
you'll
change
have to
it so I
go
can look at it, but
you'll have to go way out.
so you're into the stock 5600. God, if I was in that situation, it's not really a stock I want to be heavy in, because of the whole China situation, right? It's not a U.S. company. You're literally at the liberty of whatever Xi Jinping wants to do over there, and that's scary. So averaging down, buying another friggin', another 100 shares just to lower, so he's at 56, 43 plus 56 divided by 2. What's that bring the average down to, Gerry? Can you do that math in your head?
50-ish.
Shit, I screwed up. 56
Right?
plus 43.
50-ish.
Fuck, I screwed up. 56 plus 40. What's it now? 46?
43.
43 divided by 2. Yeah, you're right. About 50-ish. So I wonder what the premium is there. I don't know. That's a tough one. You just wait it out. Hopefully it's not the entire account,
Yeah, that's
That
I mean,
sucks, right? That puts you in a pickle, right? Where you're not making any money. You're sitting there, like it stares at you every day. It's just annoying.
and
So
that's where, we talk about quality stocks. I'll probably get crap for it, but Neo is just not a quality stock, period.
no,
So, all of a lot of those, the workhorses, the Neos, the GMEs, the AMCs, they're crappy stocks,
no
period.
Kias.
So, and no Kias, they're all crappy stocks.
The Kodaks.
So
You could sell another put.
I was going to say that, but that's like,
If you want to average down, sell another put, not right at the money, but just below. That way it gives you a little bit of move down. If it doesn't hit, then it doesn't hit, and do another one. Yeah, God, that's a tough one. It's just not a stock I would want to be in. Um, I don't know if I've ever done any NIOs. I think I have, but if I'm doing an NIO, I'm like way down there, But,
yeah, I think I did one. I think I was in the 20. I think I did a 20 strike on it.
yeah, I mean, hopefully, like I said, it's not like your entire account, and you're going to sit there and just, start joining conference calls and all that crap and figure out what the hell's going on. And sorry, man. What do you think doing cover calls on MO? Yeah, this one might be up your alley, Gerry. MO 53 strike for April, moving up pretty nicely. Yeah, I'll maybe look up the price when you talk about it, Gerry.
Ultra is, I think they're pretty much at their 52-week high now.
God,
so
yeah.
I mean, to sell calls right now is the move, I think.
Naked calls?
No, sell covered calls. He's talking about cover calls.
Oh, cover calls.
53.
Back to that screen.
I mean, the way things are going, it might hit it. So,
yeah, I mean, is this in a retirement account or not? Because you got to deal with stupid tax consequences. But you're right. This would be a good time to, I would say, let me look at the chart again. Like get above like 52 or 53 or something. See what the premium is out there.
yeah.
Right. Yeah, I might even open a naked call on it. It's not a bad one to open a naked call on, actually, but because it's probably not going to move. I think it's a low beta. Let me look at the beta. Yeah, it's super low beta. I bet you the premium's not good up there.
It's probably an SPHD too.
Yeah. Do you have any methods to get alerts or notifications when premiums go up for companies you would like? Tesla or Amazon? What do you mean by premiums going up? Like, how are you gonna? The stock moves up, the premium's gonna go up. So, what do you mean by that? I guess. Like you're looking maybe like an IV spike or something like that. You could create a. I don't know if IB has a way to do that directly. I've never really looked for that, but I could create a script that could do that. I hadn't even thought about doing something like that. It's just I need to know specifically like what somebody would want to do, like because to me, like the premiums go up. Oh, the stock's gone up this day, the premium's going to go up, right? So that doesn't really work. Unusual option activity, that's something different. They're usually looking for a boatload of contracts that is sold or transaction or whatever. So this case here, maybe an IV spike or something like that. And I don't know if I gotta have to see if that's even exposed to the API or not. But yeah, I don't know. Shoot me an email or something like that with what you're trying to do. Christian, welcome. Evening. Let's see here, Gerry. We got another one. With CSPs, how do you decide when a premium is good? I think that's a case-by-case basis or a person-by-person basis. Not most stocks. A lot of stocks I try to get $1, right? But I want to be close to that 5% probably in the money. If it's it depends on the stock. If it's like an Amazon or something like that, then I'll go to like $1, right? And it's way below 5% probably in the money. But sometimes I'll even bring it up. I don't know. I think a lot of other stocks, I just get around 5 or 6% probably in the money, and whatever is there, $50 to $70 or something like that. That's fine with me. What do you do there, Gerry?
Yeah, I mean, like I said, it's a stock by stock basis. I mean, if you're looking at something like AT&T, right, you're not going to get anything for being 95% probability of in the money or profit or whatever you want to call it. So, I might go $1 below the current stock price, which is like 80% probability. But that's all you're going to get out of AT&T. So there's other companies where I look at it and I go, okay, is this $75 I'm going to collect worth managing if it goes against me? So, you know what I mean? So it's really a case by case basis on the stock. If it's something like something really volatile like RK, I want to make sure that I get enough premium there that it's worth it to me to deal with that volatility. So that's my little bit of criteria.
Let me try to close this. There we go. Shit. I was just going to try to pop my screen up, but he wanted some examples. I have a boatload of examples. The problem is this just StreamYard just acting stupid. Anyways, I don't know. If you buy a premium, it's not technically called naked, I don't think.
No, because you own the option. So
yeah, exactly. But we understand what you're saying. Let's see here. Oops, skipped on me. Damn it. Yeah, Rich Gang. Well, Theta Gang is the bot. It's not really a bot, but it is what it is here. Let's see here. We got Matt Freddy. I do PMCCs on TQQ. That's interesting. I've never thought about doing one on TQQQ because I don't want to own TQQQ until it gets down to that 30 or 40 mark. I started in April 2020. I roll 14 days out. So far up about 9K. I do 10% out of the money and make... So 10% out of the money, that only requires like a 2.5% down day.
Yeah.
You know what I mean? No, a little bit more than that. Sorry,
3.3 or something like that.
3.5. So that's like one day, and make about 200 to 400 every week. How many contracts are you doing for that there, for Matt?
Yeah, those leaps are kind of expensive, I think.
Yeah, I don't know if I've ever looked at the leaps. You talking about buying them or selling them?
Well, he's got to buy them to do a PMCC.
Oh yeah, sorry. I mean, I'm surprised if you want to do. Were you looking at buying them or selling them though for you, Gerry?
Buying. Well, I sold. Well, no, I didn't do any leaps with TQQQ, but
so we'd be looking at doing. We're probably selling them, right? I mean, why would we buy them. We'd be buying them when it drops down to 30 or 40, 35,
Exactly.
40. My target's 35 in TQQQ, by the way. So that's where I would love to like literally back up the freaking truck and load up on leaps, maybe even common. You know, I don't know if it's called common, but the actual shares. So yeah, I don't know. This is interesting. I'm kind of curious to know how many contracts you're doing. Let's see here. With all the talk on tech going down, wondering if I should get out of the TQQ. With all the tech going down, I mean, so he's doing PMCC, so he kind of wants to be, he wants it to go up. Technically, he just wants us to stay
No,
still.
he wants it to. Yeah, he wants us to stay flat.
Yeah. Or even go down a little bit.
Yeah.
Not too much, but yeah, I don't know. I still think, I mean, looking at a chart here, it's kind of we're in no man's land. It could go down another back and test 300 again on the QQQs.
He started in wait. He started in April of 2020. So he's got probably a dang good price on those leaps from April 2020.
But he says he's up 9K. Is that all realized? Or is that just, you know, what's the money unrealized in the leaps?
You see, that's the bad part is you're up only 9K, right? I mean, that's not bad that you're up 9K, but I'm just saying, if you would have just bought the common in April 2020, you'd be up probably 4x your money in less than a year.
Right.
So it's like, yeah, I don't know.
Well, that's what we're going to be doing if we ever get back down to 35 on there. You know,
I guess it depends because it went down to what, $17 in March 2020?
Yeah, I don't know. Shit. March 2020?
Well, I guess he got it in April 2020. So
yeah, you're right. It touched about 16, 17. So he picked it up after probably hit like 35 or something like that, maybe.
Yeah, if he's got some leaps that he bought in April 2020, he's probably doing pretty well.
I guess how do you keep the I wonder, well, let me see. He didn't mention what strike he was doing, did he? Like, how do you keep that thing from going in the money?
Right, exactly.
You know?
That's been
especially for almost a year.
Yeah, and especially the year that we had. You know,
right.
How do you I don't know how you did 10% out of the money and still kept it, unless he says he's rolling. So I don't know, maybe he just kept rolling it.
Yeah, that's great to do when you don't have a YouTube channel. When you have a YouTube channel, it's hard. Yeah, I mean, so yeah, I don't know. We don't know all the details. That's the problem there. It's interesting though. We want to hear more about it though. We're definitely fans of TQQ as not a long-term hold, but as a, you know, literally a crash, a vehicle to like profit big time from a crash, or after the crash, I should say. It's just, I don't think we're going to have one for a number of years. I mean, I don't know. When's the last time we ever had a back-to-back, like, you know, 30 plus? Have we ever had a back-to-back or, yeah, I don't know. People are thinking, I've seen videos pop up, right? 2021 crash, you know, it's like, I don't know, they're just trying to get views or what? They're trying to scare people. But we had one last year. It's like 37%. We're not going to have another 30% probably. Look how much money got pumped into the market, you know?
I mean, we've had, you know, lost decades, but that's not going down. That's just staying flat. So,
but even if you picked it up at the bottom of the lost decade, you'd have been fine.
Yeah.
When you decide to sell a cash secured put, do you exclusively use the limit order type? Yes, for sure. Have you ever considered you? No, I don't use market. I don't use stops order. I don't use stops. Stops just, they get sniffed out by the market makers and they just take you out. So it's useless unless you literally got to go to the knife or something like that and you're going away from the computer monitor and you're worried about it or something, then maybe put a stop on. But We talked about this last week. Don't use a market order. You're missing out on a boatload of money if you do that, especially if you're doing it on the buy and the sell side for that same, position, right? You're going to sell it and then you're going to buy it back. If you did market orders on both sides, you're cutting big time into your profits. Also, let me tell you about this. I had XOXL on and expired on Friday. Yeah, I can't say that one. It's tongue twister. Expired on Friday, and for the whole week it was up like 95% profit. It's like, but I couldn't buy it back. It was only worth 9 cents, right, to begin with, because of the stupid split, the 15-to-1 split that it did, and I had to buy it back for 5 cents. You know what I mean? And that literally cuts right in to almost all of your profits you had. So I tried to put as 0 cents in to buy it back at 0 cents in the broker, and the broker's like, "What are you trying to do?" It's got to be a positive number. But yeah, some of them you just need to let expire. AVGO is a good example. Broadcom. The stupid thing is showing it was up like 80% in profit, but the mid price is higher than what I sold it for. Like, are you kidding me? But yet it's showing it's up. So yeah, some of them you just need to let expire, let alone doing a market order. Like a market order, you're like, can you imagine if I did a market order on AVGO? I'd be at a loss. That's how bad it would be.
Yeah.
Even though it's showing me up like 90% right now on it. Juicy Premiums. Yeah, that's your middle name. All good.
All GP good.
Yeah. I don't trust Chinese stocks at all. Yeah, I don't either. And that's saying something, because I would say like Alibaba, maybe Baidu. Those are like the two Chinese. Baba for sure. I would definitely trust Baba. But look, even Baba got slammed down recently, right? The whole, whatever that guy's name is, went missing and stuff, So, I mean, even Alibaba can get affected, but that is probably the number one stock that comes to my mind that I would probably trust out of any of the other ones. But let's see here. Brokerage account. I don't know what that response was to. You see that one, Gerry?
No, I don't remember that one.
Yeah, I don't either. Trying to scroll up here.
We asked him if it was in a retirement account, but I forget the context now. Dang it.
Yeah, I don't. Shit, I scroll all the way to the top. I didn't see it. Oh, wait. What do you think doing covered calls and MO 53 strike for April? I just put it on there. That one, Gerry.
In a brokerage account, I mean, if you're fine letting the shares
take a taxable event,
yeah, or rolling the call up and out,
yeah. Well, he didn't say it was in the money.
Yeah.
So it's one of those things where we just only know like a portion of the puzzle. Okay. Let's see. I need to get back to where I was. Did we respond to this one?
Yeah, we did.
Yeah, okay. Yeah, okay. So we're here. All right. Let's see. If you wanted to sell cash secured puts, can you give us 3 make or break rules to fall for a company like Tesla or Boeing? Did we answer this one?
Pretty much.
Do you have a minimum ROI? No, see, I don't look at ROI. That's a Thumper thing. I don't even see Thumper tonight. I must have pissed him off last night. Make or break.
Yeah, I don't have a minimum ROI either, but I like to see a 1% at least. I like to see it.
I never really look at that. Thumpers, I'll send something out. Why are you doing that? Like your risk to reward. Like I'm like, you're risking $30,000 to make $50. I'm like, am I really risking 30 grand? I'm not risking 30 grand. You know what I mean?
Yeah.
But I'm putting up $30,000 theoretically in margin or whatever, just maybe a quarter of that or something. for that $50 or something like that. I mean, it's not 50, it's normally more than that, but that's just his argument, so he wants $500 or something like that, Boeing. So Tesla's just it's just a different breed of stock than Boeing is, make or break rules. So for Tesla, I like to be super safe on Tesla. So let me give you an example. I have a Tesla open right now. Okay. It was a 9-day DTE. It's a 500 strike, 13% probably on the money on it. It was I made $116, right? You got to put like, $7,000 in capital, or maybe it's 5,000 or something like that up for it. So that just gives you an idea. Boeing's a good one too, but you don't have to be as safe, I don't think, on Boeing.
I like to do the Tesla 420s personally.
Anything below 500 on Tesla. Now, granted, it's dropped down over the last. Let me look at the Tesla here. It's dropped down over the last week. Let me go back to the daily. So
I thought you did a 350.
No, I'm usually I'm below 500 because I think it's going to stop at 500. Looking, go back to September, and then you got another hit spot there in November, right at 500. But I like to be like lower than 500 if I can, like 450 or 400. 350, I'm not really. That's just, I don't think Tesla would ever get to 350, even though it'd probably still be overvalued at 350. But there's going to be too many people that think it's a steal at 600, 500, 400. They're going to, be TFD it. What does that stand for, Gerry?
Buy the friggin' dip.
Replace freaking with something else. Rumpelstiltskin. Let's see. Dave, is there any probability of you moving your retirement date out next year? Would a market downturn change? It's already moved out a year. What do you mean? I think what he or she, them, proper pronoun. I don't know. I'm assuming what you mean is, am I going to move it out another year after next year is what you're saying. Yeah, of course. There's always some probability there. I could come down with some illness or something, like life-threatening illness or whatever. Of course, if there was a life-threatening illness, I put my 2 weeks notice in tomorrow. And I'll literally probably end up pulling a George Costanza's, parents and spend all the money before I die. So yeah, if I had a life-threatening illness, 2 weeks of notice is going in right now. But if I didn't, if I came down with some other illness or something like that, that's not necessarily life-threatening, I would kind of just weigh the options there. Everybody, I've heard so many people comment on my fire videos or whatever and say, what are you going to do if you get sick? What are you going to do for healthcare? And it's like, you can't retire in $2 million. I'm like, come on. I know people that retire to nothing, and they somehow still make it work. You know what I mean? Like they have no job their whole life, like, give me a break. I think those people they're fallen victim to what's that guy? What the hell? Susie Orman's a good example, right? She says you need like $30 million. I'm like, what person in their right mind, like regular person, normal, like 9-to-5 job type person is going to have $30 million in retirement, right? She's just delusional.
Yeah, my thing is with that kind of thing, it's you got to look at the people or the institutions that are telling you need, this many million to retire, or you need hundreds of thousands of dollars for healthcare and retirement. You have to look at who is actually pushing that on you and why they're pushing it on you. It's not for your own good.
Yeah, well, they want you to be, because they want you to pay taxes. They want you to work. They want you to be a 9-to-5 slave, because they honestly pay the most taxes, right? That's the reason why I want to quit working as soon as possible. Get in, make as much money as you can, as quickly as you can, and get out of the rat race. That way you don't have to pay as much taxes anymore. You can literally reduce your taxes down to zero once you quit working. So, if you don't have a high paying job, get started earlier if you can, right? The sooner the better, right? Whatever your age you are right now, start now, right? If you found this video, or you found this at 50 years old, you're just starting at 50, that's better than starting at 60, right? If you're 20 and you're starting, obviously you're better off. You don't have to save as much. But it's just save, live pragmatically, right? Don't freaking go out and buy the latest freaking BMW jacket or something like that, right? Don't spend money on stupid shit you don't freaking need, trying to impress people that you don't give a shit about. And they don't obviously give a shit about you either. But it's just live pragmatically, because it really doesn't matter how much money you make. It matters how much money you save and invest. If you're making $1 million, you spend $1 million, and that person that's making $25,000 and they're saving $10,000, they're doing better than that millionaire, or the person that makes $1 million anyway. Yeah, I could definitely move the date out. I don't have any plans of moving it out. I've honestly, I've played the just one more year game too many years in a row as it is, and I'm just sick of the way things are right now in my life. I'm just fed up with. I mean, COVID probably kind of made that a little bit more detrimental. Is that the word, detrimental? I don't know. It's just been a tough last year working from the house. I mean, as people would say, oh, that's the dream job. It's also a gift and a curse at the same time. It's really tough. I mean, working from the house, really not having a life, not seeing anybody, not that I'm a people person anyway, but it's just, I don't know. It's been tough. So I'm ready to move on to the next chapter of my life. I'm, midlife crisis time. I already had a couple of those, bought a Porsche, waiting to get the motorcycle at some point, but it's ready. I'm ready to move on. And how much money do you need to live? You know what I mean? Like, if you can't live off of, $2 million, and I don't have $2 million yet, but, I'm going to get there soon, I hope. And then if you can't live off of that, I mean, then you're doing something wrong, in my opinion.
You're doing something way wrong. Yeah.
And I had somebody that said, well, that's only $60,000 of income, going by like a 3% withdrawal rate or something like that. I'm like, you can't live on 60 grand?
I think there's a lot of people
that live on 60 grand.
I think there's a lot of people though that live in bubbles, that live in high income or high expense areas, and they don't realize the majority of people around the country do not live that way. So
yeah, well, the thing is, like, if you want to live that lavish lifestyle, you're going to need more money, right? Like, if you want to eat caviar and all that freaking fish egg bullshit every freaking week and go out and I mean, just what I mean, like, you just want to live like that, then you're gonna need some more money, right? Like, to me, I live on like $30,000 a year right now, okay, and I'm living in Denver, all right, in an expensive apartment, right? I live on $30,000 right now. My expenses probably go up a little bit because I have to pay for healthcare, but the way I look at it is I only need to make it to like 65, right? Because then I get Medicare, right? And then that'll cover some of it. Then you get Part B and all that junk. And okay, so that'll cover some of it, right? So you don't need to. And then I'll have a pretty substantial Social Security as well, because I've made pretty good money my entire life, right? So that'll help. That's another $2,000 or $3,000 a month, right? So it's just, I think people are so delusional. Kevin O'Leary, all those rich people, Susie Orman, Robert Kiyosaki, I mean, I'm granted he's helped me a lot, right, with Rich Dad Poor Dad, but those people are just delusional. They're super rich people. Why don't you talk about your 0.25 milli?
Yeah, so I have a plan to retire on 250,000 now. Granted, I'll be probably selling options. I'll probably still be making YouTube videos, so there'll be some income there for sure. But you can do it. It's not like I don't have to sit in one spot and keep working for that, right? Me and my wife are gonna buy an RV. We're gonna travel the freaking country. It doesn't cost a lot of money.
No.
And a lot of people, will say, oh, like you said, healthcare, right? I was going to make a video on this because people say, oh, healthcare is expensive. No, it's not.
When you
If
have a
you
low income, you actually get free money for healthcare.
exactly, if you are able to control your income, I looked at it. If me and my wife made like 50 grand a year, our healthcare would be about, I don't know, it was around $250 a month.
Yeah.
So, people say, well, what are you going to do about healthcare? Pay for it.
That's the biggest question I get. That's the biggest question anybody gets on a fire video. What are you gonna do for healthcare? Granted, so we're talking about using the exchange, right?
Yeah.
Exchange. Um, Now the exchange wants you to put your salary in there or your income in there. It doesn't ask for your net worth, right?
Right.
And how do they verify your net worth anyway, right? They can't. So you literally put your income in there. Okay, for me, I'm living on 40 grand, right? Well, guess what? You get a bunch of free money for healthcare. It doesn't matter what your net worth is. So
Right.
you might say that's gaming the system, but you know what? I can also say that they've been gaming me my entire life with the amount of taxes I've been paying too. Worst comes to worst, you go in another country and you you geo surgery in some other country. You can get surgery, you can get really good health care in a bunch of other countries out there. You don't have to have it here in the US. That
Yeah.
whole thing saying that,
A lot of people travel to Mexico. There's a whole city where you can get dental work and all kinds of
yeah.
stuff there. I mean, you know, I don't know if you're comfortable there, but that's just the way it
Well,
is.
I mean, the thing is, I think people think that we have the best health care, but honestly, there's a boatload of other countries out there that are cheaper than our country that have way better health care.
Well, you got to figure if you look at our doctors, most of them come from other countries. So,
Yeah. Just to answer the last part of here, would a downturn change my mind? So back in like 2018, 19, I was kind of hoping we'd have a downturn, and then we got one, unexpectedly in 2020 because I didn't want to go into retirement after 10 years of a bull market. So I was kind of hoping we'd have a recession. Now we did, but it wasn't what I expected. It was kind of an imitation one in a way. You know what I mean? Like that wasn't a you're always looking for something to cause a recession, right? And we're talking about like a bubble popping. This was kind of like something that wasn't a bubble that caused it, right? I mean, it was definitely not a bubble that caused it. It was something else. So an external event. And I was saying to myself, I'm like, Dave, is this really, does this recession count? It does, it counts. It resetted it, resetted it. It resetted it. It reset a bunch of stuff. So I think it counts. I'm good to go. I have plans next year. So what is Gerry and Dave's no MIO? What the shit's wrong with me? Keto fog, apparently. What is Gerry's and Dave's no VYM favorite stock to do covered calls on? I can tell you what mine is. That's pretty easy. Spy and QQQ probably. Oh wait, these are covered calls. Oh shit.
yeah,
Um,
I don't have a favorite one.
yeah, I don't do a lot of covered calls. VYM was it, and you just said no VYM, so you just took me out of the rat race of the game or whatever. And I'm probably going to stop doing VYM too.
I had one on Kroger, and I have one on Rocket currently. So that's it. That's all I got.
Yeah, Rocket, Kroger. Fair stock. Yeah, I don't know. I just don't do cover calls. VYM was it, and that strategy might be SOL. Just not liking what's happening with those lately. It's too much work. It's not too much work. That's a bad way to say it. It's not working how I thought it would. I thought it'd just be like, okay, the money's just coming in, easy, easy, easy.
Free
Never
money.
get tested, But those damn freaking VYMs have been moving, 30 days, $6, $5.
People rolling into value.
Yeah. Let's see here. When you say you have a 5% rule for in the money cash secured put sales, what do you mean that the likelihood of expiring out of the money is 95%? Yeah. Now, it's relative, I guess, because, I mean, the 5%, like, oh, 5%, it's never going to hit that. You'd be surprised. It's just that snapshot right then and there, that's what Gerry likes to say, which is true. Is that a hard and fast rule? It's a rule I try to stick to. Not every stock I'm at 5%. Some of them might come up to like 10. I mean, the I think I don't know if Randy's still here, but Randy's even changing his thing up, trying something new. Instead of going, like 30% probably in the money or something like that. With one contract, he's trying to go safer with multiple contracts. So that's kind of what I've been doing. I don't know. I don't know what way's better. I mean, you're gonna make more money the other way, but you're gonna have more stress. I don't know.
Yeah, it's not a hard and fast rule for me. It varies depending on what I'm looking at. Like I mentioned earlier, AT&T, you can't do 95%. There's some ETFs that you can't do 95%. Like XLU, the utility sector, I'm in the 80s.
Miami can't even do it.
Yeah. What else? But then there's exceptions like Tesla. I want to see 99%.
I don't go that safe on it.
I do.
I just look at the strike and then whatever the strike is. Man, I mean, I can tell you what mine is, I guess, on it.
So
mine was
hard and fast, no.
Last one, let me see. Oh, I did have a 2% one on. So that was a 400 strike. That was 2% probably in the money. So I just look at the chart on Tesla, and then I figure out where I want to be, like strike wise than that. And it ends up usually less than 5%. I think 5% is too risky on Tesla. For me, it is anyway. Let's see here. TQQ, I bought 50. Okay, so here we go, Gerry. Bought 50 Jan 2022. Paid $1,600 with a split strike. Okay, what's a split strike?
Well, they split. I think I forget when though.
Oh, I do. Okay, gotcha. I do 2 contracts and keep rolling up. 2 contracts. Okay, I lost some money when it was going up.
He bought one and it split. Now he's got 2.
Oh yeah, gotcha. 50. No, shit. I don't remember what the other part of the question was. No.
I don't think it was a question. He was just stating that he was doing a PMCC on it.
Yeah, I'm just saying like all the details above.
Yeah.
50.
He made like $9,000 over that time. He bought these in April 2020 and made $9,000 so far. And we were wondering, does he keep rolling it? And that's what he's doing. Keep rolling it up.
Keep rolling. I mean, so is that all realized profit, or are you counting in what the leaps are worth? But eventually, I caught up, and current overall profit 9K.
There you go.
Okay. So that means out of everything?
No, I think he's still in it.
All JPS good. Yeah, exactly. All good. When and how do you decide to buy back your cash secured position? How often do you let them expire worthless? That's a good question, because the thing is a lot of some of the ones I let expire are the ones I can't buy back because it costs me too much money to buy it back. In most cases, I try to buy back 70% profit, because it takes from that 70% to that 100%. Like it could just be 2 days, like right before it expires. And you're like literally, God dang, you're missing out on money by just having that sitting there, right? Take your 70% profit, put a new one on, because that first part of the decay happens pretty quick, right? But the last part of that decay takes quite a while, unless it's really moving up pretty hard. So 70% for me, it was 50%. I moved it to 70. And I've noticed that's a little bit, it takes a little bit longer to get to 70, especially when the market's not going up, obviously. So I don't let them expire worthless unless they cost me too much money to buy them back. And only a couple do that. Like SOXL does that. AVGO does that. There was another one that had a problem doing that too, where, it's showing that it's up and I couldn't buy it back without really cutting the profit. So 50%. I used to be there. I'm trying to, the amount of work it takes to put them on, find the stock, look at the strike, look at the chart, find the strike. I've been trying to just let them bake a little longer. So what about you, Gerry?
Yeah, I'm all over the place. It really depends on the performance of it and how fast that decay is happening. If I need to buy something back at a lower profit to get into what I would believe to be a better position, then I'll do that. But I don't think I've ever let a put expire worthless. Um, you
Really?
know, I've never done it. I could have done it. Well, like for example, this past week, I was in a PBW ETF put with $100 strike that I held for an entire friggin' month, and it was way out of the money when I put it on, and then it was challenged. It was like Thursday, it was in the 98, 99 range. It was in the money, and then Friday came along, and it rose up to about 101. And so it sat there kind of all day at 101. And I'm like, you know what? I'm going to take this sucker off, even though in 2 hours, this could expire worthless. But I'm going to take it off because I didn't want to manage it just in case we had an end of the day dump. So I bought it back. It was like 70% profit. I gave up 30% because it would have expired out of the money. But I didn't want to deal with that. So
You
that's,
did opposite what I did in my VYM,
yeah.
basically. There is a risk to letting one expire worthless because the market doesn't technically close for like an hour and a half after. I'm talking about the options market. You can't do anything after the market closes at 4 p.m. Eastern. But if the stock dropped for whatever reason after hour on Friday and it went in the money, you're going to be assigned those stock. You're going to be assigned that position. There's a risk there. Somebody did a video on it. I don't know who it was. They lost a boatload of money because of it too. So with a cast secured put, really you just be assigned the freaking position. It wouldn't be that big of a deal, but they're probably doing something fancy. And honestly, that's such a rare occasion that it's going to drop on a Friday night/afternoon, especially all the stocks that we're doing to in the money. Now, if it closed, just barely out of the money, there's a chance it could drop after hours to being in the money, right? So you definitely, look at the stock. What kind of stock is it? Maybe you want to just close it out. It depends on how close it is, I guess, to the money, and what stock it is. Just know that it doesn't really close until I think 5:30 Eastern. So whatever happens after hours, the stock goes down or something like that, you could be in the money. So, question: is that a 1% per month you are targeting? No, I'm targeting 2. 2 should be 1% would be pretty easy. Matter of fact, with 1%, I could probably just do SPY in QQQ or just straight QQQ or SPY or one or the other or both. But 2% was kind of hard to get with just straight SPY and QQQ with where I wanted to be. I don't know. 1% would be pretty easy. But still, that's 12% a year. That's pretty damn good, right?
Yeah, that's still better than the S&P average. So
yeah, exactly. And that's like you could probably do that in your sleep.
Yeah.
Can you give us some good examples of mistakes you see people cascade puts, assuming they're not sold on horrible companies? Okay. Mistakes. Yeah. I was just say shitty company.
That's my first thought.
Underestimating the thing's going to move, trying to be too aggressive on the strikes. Long DTEs. I think that's kind of a waste.
Selling on earnings.
Mistakes you've seen people. Too many contracts.
Selling market orders.
Market orders. I don't know if I've ever seen anybody do that, but let me see. Trying to time it, I guess. Thinking that they can outsmart the market, I guess. Thinking that if that's the case, why don't they just day trade, right? Like they think it's gonna. I don't know. You can use a little bit of logic there, right? You think it's going to go up, then do something, but trying to day trade it, like perfectly time it or whatever, then Then why don't you just be a day trader? There's not a lot of mistakes you can make with cascade puts, in my opinion. This is just crappy companies, right?
Yeah, that's the big thing.
Too aggressive or chasing
Or
premium.
chasing premium, chasing hype, like
Hype.
GameStop, chasing that
Well,
kind of
that
thing.
takes the horrible stocks out of the equation,
Yeah, exactly.
or it puts it in the equation, I guess is the way to put it. Yeah, I think we answered that. Is 1% a month a reasonable amount for the portfolio? Not using margin. Not using margin. So if you have $100,000 account, that'd be what, $12,000 a year. Could you do that, Martin?
I
I
think
think
so.
you could. Yeah.
I think so. Pretty easily.
So 100 grand. I'm just trying to think. So that'd be about $1,000 a month, right?
Yeah.
It would be $1,000 a month with 100 grand. I don't know because I've never not used margin. So, um, I should be doable though. If you're doing what we're doing, it should be doable.
Well, yeah, should be.
So,
$100. Just say $100 stock is what, 10 grand. So you can do. I'm just generalizing. 10 different contracts,
you got $100 a piece.
$100 a piece. I think that's possible.
Yeah. So you only need to do 250 a week.
Yeah.
Yeah, that should be doable. I mean, a Tesla stock is what, 50 grand, right?
Mm-hmm.
So 500, 50 grand. So even if you had two of those on, right, like that'll get you 250 a week easy.
Yeah.
I'm not saying do Tesla. I'm just giving you an example. Let's see here. Tesla ain't worth $100. Yeah, that's my. So he's yeah. And people probably thought I was beating up Tesla for saying it's overvalued at 250 or whatever the price was, and I gave exactly. That's my argument right there. Um, the problem is there's a lot of extrinsic value. Is it extrinsic
Yeah.
or intrinsic value in Tesla? Right, just in the
Yeah.
name and what they're doing.
Yeah. People are paying way more for, what they're worth. If you were actually to just value it on its earnings, what would it be? Let's say it's a
Well,
30 PE. What would the price of
well,
Tesla?
GM and Ford don't get a 30 PE.
That's what I'm saying.
Not
Even
even
if you were
close.
generous.
Right? Like if you actually valued at what GM and Ford, I mean Tesla, like it would tank big time. But the problem is I don't think you can value it as a traditional car company either, though. People say it's a tech company, but to me, it's not a tech company. It's just it's a new era of car company. uh, it's a mix of texture, obviously, but yeah, I don't think it's just straight tech though. GW, well said about the institutions. What institution?
The people that don't want you to retire.
Oh yeah, for sure. Senior Wall Street tycoons talk about an asteroid coming. The valuations are extremely high. Yeah, we'll all be on Mars by then.
Yeah.
I'm worried about
I'll
it.
take
Well,
Pluto.
isn't the atmosphere thin there? Yeah, that I don't even want to be on Mars. I don't want to be on Mars during asteroid. I want to be on Earth because that's the reason why there's so many craters on Mars because nothing burns up before it gets there.
Yeah.
We're living on the best planet. Sorry, unless you're some sort of other species that's not a microorganism on Earth that needs water. Yeah, BMW jacket. Would you guys consider moving to a trader-friendly country, no tax? Cyprus, Puerto Rico, Panama, the Bahamas are good. I would, yeah. I've never been to Puerto Rico. Not really ever considering Puerto Rico. I've been to Panama before. Panama, I didn't really have a good feeling of Panama. Now, granted, I was only in Panama City. I didn't really get outside of Panama City. It was kind of grungy. But I think outside of Panama City is probably fine. So I need to go back and explore it. Costa Rica was good though. I could be in Costa Rica trading. Jerry, you gonna drive your RV down there?
Yeah, maybe. If we got a bridge going down there, I'd probably go down there.
You
I
don't
don't
need a
even know where the
bridge.
hell it's at.
It connects all the way down. You got to go through some sketchy places, but
Yeah, right. I don't know. If I can bring some weapons, maybe.
yeah, it might be tough. Well, at least you won't have to worry about all the migrants trying to hitch a ride going back down to their own
Right.
country. They might try to steal your RV and go the other way, though.
That's the problem.
Let's see. Which is better to grow a small account faster? Invest in dividend stocks or growth stocks? Well, I think the answer there would be probably growth stocks, but
It's just risk on a
yeah,
lot.
exactly. Depends on how old you are, I think. A dividend stock portfolio is not going to grow your account fast, but it is steady income regardless of what the market's doing. The market goes down 50%, you're still making that same amount of money if you're in quality stocks. So it just depends on how old you are and what your goals are. That's an interesting question.
The younger you are, I'd want to be more heavier in growth. I mean, knowing what I know now.
I agree. I would just take out, small account faster. Just get rid of that whole mindset. Just try to work on having quality investments. I don't know, because I skipped that phase, I guess. I never knew. I was talking to Thomas about this, matter of fact, in a bunch of the comments or whatever. I skipped that whole phase of my life, really, about growth, about even knowing what that was, about outperforming the market. I had no idea about that whole concept until I was already, had quite a bit of money, like a substantial amount of money.
Well, also if you're young, and I think it's you're better off investing in yourself, like yourself did, in your education to be able to earn more, and that way you have a choice. You don't have to worry about, oh, I need to be in growth stocks because I feel pressured to grow it. You can make more money and be have a little bit more freedom to do what you're doing with your salary, if that makes sense.
Yeah, if you're in a career field that allows you to get a master's, you're going to get paid more through the next 10 years or something like that. 10 years is the threshold, in my opinion. You can become a millionaire in 10 years. It's just it's going to take a lot of work. So yeah, definitely invest in yourself. Just like Gerry said, I made a video on that, a very old video, but if you're working paid for the masters, have them paid for it, right? Why not? You're going to get paid more throughout the rest of your career, right? But this is an interesting question because, to me, it's like, don't focus so much on that. Focus more on trying to better yourself in the career, but also, cut expenses, try to invest as much as you can. I think Matt Money touched on this. He's like, good luck trying to grow your account to $1 million, right? From zero, just off of like appreciation and whatnot. Can it be done? Yeah, it can be done. But if you're going to put $10,000 in there and never put any more money in there, it's going to take 40 years. It's going to take a long time to get there. You need to continue putting money in every single month. Okay. No, I'd concentrate on that, being solid investments, and then just concentrate on, cutting your expenses, living within your means, not keeping up with it all goods, and basically invest in as much as you can. And let time do this work. Let compound interest do its work. The problem that I started investing around like 25 or something like that. I think 25. I'm not talking about like in my own brokerage account. I'm not talking about 401k or anything like that. And I had no idea what, returns were. I just know I should be investing, right? So I'm like, oh, I'm gonna invest in this. I'm gonna invest in this, whatever. Cisco is my very first investment, by the way. And I don't know if I ever figured out like what, how to beat the market or what that even was, that concept was. Okay, now granted, if you watch YouTube videos, everybody talks about that. Now YouTube didn't exist back then. Okay, all I cared about was getting a return. And everybody says 8% or something like that. I mean, you learn that later on in life, but like to me, it's like I just thought investing, period, was better than not investing, regardless whether or not I was, not whether I had a return or not. You know what I mean? That was just in my mind. I don't know. I think I'm a flawed human being for that one, Gerry, because I really didn't even learn that concept until I started my YouTube channel.
Yeah.
I started watching videos. So I had already been a millionaire at that point. So I didn't even know what that was. So I'm a kind of a bad person to ask that question, I guess. Don't answer this question if it's invasive. Yeah. I'm not going to go there, Gerry. You know I want to go on that one. How much cash are you working with for your cash secured put sales? $200,000 account. You don't have to answer that one, Gerry, if you don't want to, but you can if you want.
Mine's mid 40s.
Yeah, and he kills it, by the way. So $40,000 account, like he has a pretty good return out of there. My account's at $200,000 for my options trading. I'm pretty much probably going to keep it there unless I get some sort of influx of money from some other investment or whatever. And I'm going to generate what I can generate off that. All the rest of that money, I'll probably take out every single month and put it in the dividend portfolio. Any idea how much premiums you have made? Yeah, well, last year. So last year I really didn't. I wasn't really. I was kind of off and on. I was doing like just a little bit here and there, just collecting, $500 a month. No, not really hitting it hard. Didn't have a. I mean, the account was smaller too, so I wasn't really making it a priority. And I think you started late last year, right?
Yeah, I started late last year. I think October. So 3 months. I had a anomaly month in December. So
Yeah.
I think, those 3 months, I think I made about $9,000, something like that.
I made 11 grand just in options last year. How much? I don't know, like $70,000 in gains or something. $70,000 investments last year. It's 11 of that was options. This year it's going to be flopped. I'm going to try to hit 48 plus. And that's, I mean, it's good money, but it's not like knocking it out of the park either. So, how often do you sell cash secured puts? Daily, weekly? Yeah, daily. It's daily. We're in our accounts daily.
Hourly?
Yeah.
No,
Secondly,
sometimes.
yeah. How many cash secured puts could you have going on? Oh shoot, I got a boatload on right now. Are we talking about contracts? Or are we talking about the actual positions? How many do you have on right now, Gerry?
Contracts, off the top of my head, I think I'm between 25 and 30
Contracts?
contracts.
Okay, so I can tell you. I'll just run my script here. IB, let's see, in sync. I would just say, oh shit, 983. I'm running, let's see, 24 positions right now, 41 contracts. So there you go. And I'm kind of light too. So I'm trying to, I got rid of all the PMCCs where there was a boatload. I got rid of the SOXL where there's 15 and all that. So yeah, 24 different positions and 41 different contracts or 41 contracts. And that's going out like 3 to 4 weeks. So if you could only sell cash secured puts on only 5 companies or ETFs for the rest of the year, I was going to say the rest of your life, but rest of the year, which ones would they be? SPY, QQQ, probably Tesla, probably Amazon. Is that 1, 2? TQQQ?
There you go.
Is that 5?
That's 5. I'd probably do QQQ, XLU, which is the utilities ETF. IWM, which is the Russell 2000 small cap.
I don't like that one.
I know you don't.
I don't like it.
I'd probably do AT&T because I like to be safe.
Throw O in there then. That was a pretty, honestly, O was pretty decent.
I want to get to O, but it needs to be at that 60 mark so I can do that 57.50 strike. That's the only problem with O is the 250
on. I had it on anyway. Well,
they need to adjust that,
right? What's that?
They need to adjust that to where it's by dollar because it goes from 60 to 57.50.
There's probably just not enough. Yeah, there's not enough volume there. What if you went out like 6 months? Are there's dollar strikes?
Oh, I don't even check.
No, I'm wondering. Let me look.
And my fifth one would probably be TQQQ.
Yeah. I mean, I threw Amazon out there because it pays. Like you can get so wide on that thing. So I'm looking at September's. Oh no, yeah, they're 250s. Let me look at Jan's. Yeah, nah, O's tough. They're 250s all the way out to January. So yeah, I think we answered that one. Let's see, Donkey Kong has a huge premium, maybe. Donkey Kong. That's just my nickname for that. DraftKings. Huge premium, maybe I should sell a straddle. Interesting. Straddle works best at earnings. Why else would you do a straddle? A straddle needs, so if anybody doesn't know, a straddle needs it to move in a big way, either direction. One way or another, it needs to go up big or it needs to go down big before it expires. Because you need to have you need to have one side wipe out the losses from the other side. So that's how straddle works. That's the reason why straddles work great on earnings. But you need to know that the stock is going to make at least a 10% move or something like that, up or down. So maybe, did you mean strangle or did you mean straddle? Just let us know. Because I'm assuming, I've never heard anybody talk about a straddle ever, really. So maybe it's a strangle. What do you think, Gerry?
Yeah, I don't know. I'll lean on you for that one.
Hey, Rick. Welcome, buddy. If you're still here.
Yeah.
There's Thumper. You can get like 1% a month without margin. A monthly's on T. Just on T, huh?
Well, you could. I mean, with $100,000, you can sell what is that? 10, 20, 30, 33 contracts per month.
Not PMCCs either.
No, just straight up cash secured puts. And 33, maybe you get 50 cents. So you're getting roughly $1,500 a month off of it. So you could easily.
T is a good one, honestly. I haven't really looked at T since I got out of the PMCCs on it, but I really probably should. Look, you know what? I'm going to look at that tomorrow. Put that in my to-do.
I mean, you're not going to knock it out of the park, but it's not bad.
Yeah. Yeah, I mean, that's more than the requirement, though, right?
Right.
So you can get safer. I don't know if you can get safer on that. You go down even further, there's probably
no. You got to be like 1 to 2. You got to be like 2 strikes down.
50 cents out or something like that. Let's see. What is the 1 to 2% rule mean? Are we talking about ROI? Well, assuming we're talking about just returns, I guess, per month. Annually, 12%. Yeah. I'm shooting for 24% this year, and I started the year off 6,000 up on January, 6,000 up in February. Now March has been kind of troublesome, but I'm still up. My requirement is what, $4,000 a month to get that 24%. So I'm still in line. You shooting for 2%, Gerry? Or 24% a year?
I'm shooting for more than that, but
you're shooting for that 60%?
I'll take what it gives me, but at least 2%.
And your 0.25 million, you're going to hit that. Like, you gave yourself 10 years, right? Obviously,
Yeah,
you would love to hit it earlier if you could, right?
I'd love to hit it earlier. And to be honest with you, I'd probably take off and quote unquote. I'm I don't
Soft
know how much
retire.
of this I don't know how much of this I want to share, but I'm almost semi-retired now.
Yeah, that's
Uh,
true.
so it's just that I'm in a house and I have bills that a household needs. I have a child to take care of, et cetera, et cetera. So, um, but once we are free from that, I'd take off way earlier than my goal of 250K or 0.25 mil.
But let's just say you did work for 10 more years, or I mean, just doing what you're doing now, right? Like just doing options, I think you're going to surpass that goal. So,
Yeah.
um, let me ask you this: that whole $250,000 or $250,000, it just so happens to be your goal, but that $250,000 to raise a kid, is that true? That sounds like such bullshit to me.
I don't know. It sounds like crap to me.
The
I,
kid, it's going to raise a kid over a lifetime. It's going to cost you everything. I think it's
well,
bullshit.
I think they when they take in those numbers, they talk about college.
Gotcha.
So, I wouldn't pay for my kids' college. Period. You choose to go to college, pay for it.
Sorry, little Gerry.
I mean, life costs
That
money,
happened to our
man.
household too, so it doesn't matter. I probably, honestly, because of where I'm at in my life, if I had a kid, I'd probably start like was it a 529 or 502 or whatever the hell it's called. I
Yeah,
stick in 20 grand or something, and just let it bake for 20 years. I mean, they're gonna be better off with that than nothing, right?
yeah.
And then kind of reassess. Since I'm so old as it is, I'll probably literally have one freaking knee in the ground by the time they get to college age anyway.
And that's my thing. It's we struggled for most of our life, and we try to raise our kids, of course, to be better than us. So, um, if I did my job correctly, they should be way better off than I was at that time.
Always try to better the generation, right?
Yeah. So, I'm not worried about it. What are you going to leave your kids when you die? Hopefully nothing, because I'm going to enjoy it.
George stands his parents. Yeah, exactly. Um, I think your son's smart. He's going to be fine. I
I think
mean,
so.
just make sure he doesn't go into hardware. Let's see here. It was a Donkey Kong straddle. Okay. Selling one, so I don't want. I don't know. It's got to make a big move. That's the problem. Otherwise, it's going to sit there and bake and not do shit for you. I don't know. Let us know how it works out. I don't know of anybody. I've never met anybody that's done a straddle yet. So I don't know. Straddle works best on earnings, in my opinion, but you need to case the stock out and figure out how much move it's going to make before the earnings. Okay, with cash secured put sales, how long does it take for your orders to fill? How long do you wait before? I'm the one that determines when it fills. I don't wait around for it to fill. I mean, maybe once in a while I'll put one out there and say, okay, why don't you fill, you some bitch? Like sit out there. But and generally I'm the one moving it around, making it fill, right around the mid price, or I try to get better than that. So I'm not, it depends on the stock too, right? Some stocks will not fill at mid price, you know, those lower volume stocks, those ETS, they might not fill right away.
Exactly.
But most of the stuff
Um,
I'm trading fills right away.
yeah. Sometimes I have to put stuff on, but if it's not where I want it, then I'll come back to it later. I won't put an order in, because if that stock moves and it just fills, you could, an hour later, you might be looking at that and go, "Oh crap, I could have got $10 more."
Yeah, exactly.
So if it's not there at the moment I place the order, then I'll press this. There's a save button on Interactive Brokers. So you can save the order in the queue, and then you can go back and look at it and see what it's done. Where you go to hit, it's in the advanced button.
Advanced button.
Yeah.
Oh.
Well, you know what? You probably don't use it because you don't use the strategy builder.
Yeah, I'm not using the strategy builder.
There's an advanced button, and then you could click save, and it'll put it in the queue.
Huh. Okay, well, look at that. You heard it here from the horse's mouth. How long do you wait? Yeah, okay, there you go. It just depends on the stock too, obviously. Got to get my options up so I can make 1K a month. Got to get my options up. What do you mean by that? Options account?
Money up?
Yeah, I don't know. I mean 1 week.
1K a week? That's what she wants to do.
A week. Yeah. Okay. So she's maybe talking about just meeting the options account up higher, so she make that 1K a week. We were talking about that, I think, last week, right? Like how much money would it take to generate such and such? 1K a week. That's literally my target right now. I'm actually going to do better. I want to do better than that, but that's 2% a month, a $200,000 account. So that's 1K a week.
Yeah, we were just talking about it with 100,000. So
yeah,
times that by 4. So if you wanted to target a conservative 1% a week, you need 400 grand.
Yeah, well, that's out of the reach of a lot of people.
Yeah.
Except Randy. Yeah, 1 week. Okay, so Thumper, Gerry will be $250,000 in less than 4 years, I bet. Gerry prints money.
I hope so.
Is 4 years, is that too conservative?
That's kind of aggressive, I think, but
okay. Oh, yeah, are you not ever adding money to your account?
I haven't been.
Okay.
But I will be soon. So,
what's your goal by the end of the year? What's your goal to have the account by the end of the year?
The options account, I'd like it to be at 60. That's a little aggressive, I think. But
I don't know. I guess we'll find out.
We'll find out.
I mean, once you get 100 grand in there, I mean, it's turning that over 24%. Yeah, I guess I'm just being unrealistic for you on your behalf. I guess 4 years.
But
yeah.
I mean, my income is so sporadic, so it's kind of hard to judge. But if I can get some steady income and I can throw some in there, it might be pretty easy to do.
Yeah, add an account. That's the key, folks. Unless you're just trying to generate monthly income. But if you're trying to get rich and retire early and all that, you need to continue to add money until the day you retire. Can you explain what the bid and ask is? A guy who sold at market value. Do the high five. Don't laugh. Okay, you can laugh. I'm not laughing. Just don't do it again.
Yeah.
You're hurting yourself. Don't do it. There's no reason to use market orders unless you're day trading. So what's the bid and ask? That's the market, right? The market makers, that's how they get paid. Okay. So the market order, if there wasn't a bid and ask, I mean, we could arbitrage a bunch of shit too, using different, clearing houses and all that crap, so that's the reason why the bid ask is there. But that's also how the market makers get paid. That's how there's a market. You got to have a bid and ask. So you buy at the ask, you sell at the bid.
Okay? Yeah. So simple answer is the ask are the sellers, the bid are the buyers.
Yeah.
That's the market. It's like a big auction.
Exactly. And there's always somebody coming to the front of the line. It's like a queue of a bunch of people that want to get out right away. They do a market order because it's going to take the ask, it's going to take the bid. So they're get moved right to the front of the line. And then all the other people in the limit orders that have, trying to get better prices or whatever, then they had to wait in line until somebody else comes up ahead of them with a better price. So that's what it is. Just don't use a market order. You're hurting yourself. D says, has hey at Dave. Hey D at Dave. Hey Tam. Hey D. I guess it's 10 o'clock. Well, right there, 11 o'clock your time. Staying up to hang out with us. Thank you for that. Great stream, guys, but I got to be busy tomorrow. Come on.
Rick's
Come
always
on.
busy.
Wait. Come on, man. You retired there, buddy. Come on, man. Let's see here. Sorry to repeat this question. What is the one? Yeah, okay. So we're just talking about 1% return overall for the account.
Yeah, it's just your overall position. So if you have 10 grand, you want to make 1% a month, you'll end up with 11,200 at the end of the year. That's essentially a 1% per month return.
We're down to the bottom, Gerry. I guess we'll give it like another few minutes or so, unless there's, then we'll call it a night. But unless you want to, let me throw your channel in there. I should have threw it in there earlier. Shit.
So, I'm not logged into anything. What are futures looking like?
Futures. I am logged in. Futures are down like the YM's down 75 points. So it's like a quarter of a point. NASDAQ's up though. So it could be one of those days where the NASDAQ's going to recover, but the rest of the indices are down.
Yeah, people are going to eventually buy that dip in the NASDAQ.
Oh, of course, yeah. Here is Gerry's channel. Go ahead and subscribe to Gerry if you're not already. I know there's 30-something people in here. So if you're not familiar with Gerry, does a lot of ETF reviews and stuff. That's where I get all my ETF information from. He's like my go-to ETF expert and stuff. I ask dumb questions and he gives me a hard time and all that. Yeah. I'm looking at the XYLD, yeah. XYLD, yeah. That's
XYLD.
I'm looking at the XYLD to replace the VYM, but I don't know. We'll see.
Too many YLDs.
Yeah, I might piss a bunch of people off by doing that. But look, I'm trying to find the best solution for my retirement. Okay. You might not be in the same boat that I'm in. You might not need that income. You might be still trying to grow your portfolio. I'm in capital preservation mode. I want income to provide for all my day-to-day bills, to pay for everything I need to. If I was in a coma, it'd pay for everything I need to pay for. Okay. And then I'll use options to pay for the rest or whatever. But so I'm in a different boat than a lot of people. So you might not agree with my strategy. And I'm still trying to find the strategy for me, okay? Because I've had a lot of flack or whatever you want to call it about my strategy, but I'm still trying to find the strategy that works best. Lets me have the income, but it has the upside, but maybe protection, good solid stocks, good ETFs. It doesn't necessarily need to pay monthly, but that'd be a nice plus, right? So I'm just trying to find all of that and, let me go through that process because, if I can figure it out, right, then you can literally parrot trade what I'm doing. And when you get to retirement, you could do the same thing, and have the exact, and I've already figured all the bugs out, so welcome, Ryan. Glad to have you. I haven't watched your latest crypto video yet, but it is in my queue to watch. So you didn't do a freaking NFT video like I wanted you to do, but darn you. I want to know what those damn NFTs are. Watched your dividend video yesterday. Got it set up today. All right. Or got to set it up tomorrow. All right. Sweet. What broker are you going to go with, Tam? I've been buying the NASDAQ dip. Yes. BTFD, baby. It's only 5 p.m. here. Jesus. Yeah. Hawaii life.
Wait, where? Hawaii.
Hawaii life. Dinner prep and dinner prep and a glass. Are you keto? Are you keto? No, not with champagne. Enjoying Dave and yep. So I think she's a dividend investor. I like her cat, by the way. I'm a cat lover. That's the way to my heart, by the way.
And bacon.
Yeah, chocolate chip cookies and cats. That's how you get to my heart. Well, yeah, I could probably live without bacon, especially if there's, chocolate chip cookies and a cat nearby. But yeah, bacon's there. It's right there too. New C baby. Yes, new C. No plans getting rid of new C, but I thought about maybe splitting VYM out into another position, not getting rid of VYM, and then splitting it out, or getting rid of VOAM for something else. I don't know. I really want to cover the S&P 500 stocks if I could. That's the reason why not QLD. Damn you, QLD. XYLD is in the mix. What do you think about that, Gerry? What do you think I should do?
What do I think you should do? I think you should.
What would you do?
I like sticking with the VYM.
You like the VYM, huh? I know you like SCHD better than VYM.
Yeah, I like Degro better than all of them, but I mean, I don't know why you need to change. I don't understand
because
the
I'm
need.
gonna lose how much money off of my covered calls not doing that strategy.
Yeah, I get that, but maybe you just build up your new seat to offset that.
That's a good idea because you can't go wrong with QQQ or NASDAQ, right? What are you doing, Randy, here? I finished last year 97%, prior year's 86%. So very doable. Oh, okay, yeah, it's the returns. Yeah, he 300K or something last year, right? Jesus.
Yeah.
Now he's trying to dial it back. Dave, just go all in on Bitcoin Cash. No, it's not going to happen. I'll go in a little bit, but it's not going to be all in. That's for darn sure. That's the reason why. I don't know. I just don't have the nuts to do it. Got a call on Apple. I won that same week. I did QQ upside down until Friday. Apple and Microsoft have been selling off. Kind of weird. It is what it is. They're tech, right? So why not? But I think you can get some pretty good premium, and it's not going to really drop too much further. NFT this week. You want to talk to that one?
What was that?
You want to talk to this one?
Apple. I've been looking at Apple. I got some good premium a couple weeks ago out of it, and that's kind of one of the problems is if I get a good premium out of a stock 1 week, and then I'm looking for it, like, okay, you paid me $90 for this strike, 2 weeks ago, and now you're only paying 60 cents. It's like, I don't know if I want to, go into it now. And that's where I'm at with Apple at the moment. But I had one 2 weeks ago. So
you're premium greedy now, huh?
Yeah, it's a love-hate relationship, I guess.
Yeah, I know. The Apple, I think I'd try to get down to 100. Now, Apple just doesn't move very much anyway. I think 100 is probably probably too safe, but it is what it is.
I was looking at the 105s.
That's not bad. I always have an Apple on, so let me see what my Apple is. I normally have an Apple on. Let me see. Do I have an Apple on? Should I close that some bitch? Holy cow. Maybe I don't have an Apple on. Maybe I took it off. No, I do. Take it back. It's 110 for a 15-day DT. So, yeah, I mean, I don't think it's going to get there. Like, there's a lot of support at 110 anyway, so I'm not really worried about it. That's one of those stocks where you can just it's low stress. I get a sign. I mean, it's no big deal.
It's almost to me, it's almost like a big AT&T. The way it acts.
I like AT&T. So Microsoft and Apple are two I always have on. Like they're literally like ones I just never really think about. NFT. I want to learn more about those. Not that I'm like, there's a big market for virtual merchandise now, which is kind of weird because I saw it on CNBC. People selling virtual shoes and stuff that you can put on your characters in games and crap. And they're making millions of dollars off these things. They're expensive because they're collectible. They're like, they sell virtual, they're like limited edition and all that stuff. There's only 100 pairs of these shoes made and stuff, and it's all tracked by crypto. So people are, treating it as an investment and stuff. It's actually pretty fascinating. They're think of Louis Vuitton making a virtual purse or something like that, right? And they cost a fortune and stuff. It was fascinating to see though. But they're showing the shoes and stuff, and You know, can you imagine wearing some Jordans, some virtual Jordans or something like that in some game or whatever, you know? Like, oh, it's hilarious. That's
Strange.
where it's going. Like, we got virtual merchandise now. Let's see. How do you make sure to get 2% bonus with selling the puts? Well, I mean, how do you
You
make
don't.
sure? There's no really guarantee. There's no guarantee in it. You calendar out. Do you have your calendar out and run numbers? Uh, I tried that with SPY and QQQ, and it was tough. I literally ran all the numbers and all that, and I'm like, I'm not going to make as much, you know, so I didn't do it. Or I tried it. Yeah, you know what I try to do for me is I try to put on like 1,200 to 1,500 premium per week, and put it out like 1 to 2 to 3 weeks out. Not 1 to 2. I try to put it out 2 to 3 weeks out. Sometimes I run out of buying power to do that. And if you buy back 70% of that, right, or excuse me, 30% of that, that's your 70% gain. That should get you close to, you know, the goal that I'm trying to get to, which is about $1,000 minimum per week. I don't know how you do it, Gerry. You just take shit on, you put shit on, take shit off, you put shit
Yeah.
on, take shit off, and whatever you get, you get.
Yeah. I mean, essentially, yes. I mean,
Yeah.
I'm not. I mean, I'm not. 2% a month is nice, but at the end of the year, if I'm up 15%, I'm not going to be upset.
Right. Well, we expect to be higher than that anyway. We expect to be higher than
Yeah.
24% probably, but 2% is our goal.
But I don't sit there and say, okay, I'm only at this much. I better do something about it. No, I let the market. I take what the market gives.
You have to, yeah. When the market's doing what it's doing right now, where it's not going up every single day, and it kind of makes us taking profits. We have to take profits a lot slower, and we're not making as much money. You've got to reset your expectations. You know, I made $6,000 last month. I should be able to do it this month. Well, you're just you're going to get your bubble bursted because or cherry popped. I don't know, whatever, because it's not gonna it's not gonna work, and then you're gonna be upset and whatever. So just dial it back, right? You did two today. I didn't see two. Bernie Sanders. We saw Trump attacking. We saw Trump attacking Biden on the stairs. So I laughed so hard when I watched that. It cracked me up. Yeah, I'll have to go back and watch. I don't know when you did the other video because I only saw one come out. It was in my queue, but I'll look for the other one too, and I'll watch it tonight. Vanguard or Charles Schwab? God, if I had to pick one for you, I'd pick Charles Schwab for you. Just because Vanguard and Fidelity are they're literally like medieval, old school. Charles Schwab's old school too, but they're not as old school as Fidelity and Vanguard.
Yeah,
You want to share that information real quick about what you found about Fidelity?
I would agree with you. I'd go Charles Schwab, even though I don't have an account with them, over Vanguard, even though I've never had an account with them, just by looking at their dang website. Vanguard's website is like archaic. It's like
it
ridiculous.
Came before the internet, that's why.
Yeah, it's ridiculous. But Vanguard and Fidelity is getting better, but they do have some of the sets of their own kind of. They want to protect you a little bit too much and handhold you a little too much.
It's a nanny. It's a nanny broker.
Yeah, it's like in my Roth IRA, I want to sell cash secured puts, and they don't allow it apparently. So that's
Schwab does though.
Schwab does.
Checked. Well, yeah, they do because it's level 0. Level 0, they'll let you do CSPs. And that's all they'll give you in a retirement account is level 0 in a Schwab account. But so in Fidelity, you can't do that in a retirement account. That's a big negative.
That's a big deal. That's a big deal. Yeah. But I think Fidelity is great though.
Great research. Yeah.
They have good research tools. They have fractional shares, just like M1. Charles Schwab has a version of that. Vanguard doesn't. M1 has a pretty decent app on the phone if you're like a phone person.
Yeah, I would say no to M1. You can't do well. for dividends is fine, but you can't do options in there,
Not on
right?
M1. I'm
Yeah.
talking Fidelity's app. Fidelity has a pretty good
Do
app.
they call it M1?
No, it's
Oh,
Fidelity.
you called it
And
M1.
I'm saying they have fractional shares like M1.
Oh, gotcha. Yeah. Okay. Yeah, Schwab's
So,
different. Their fractional share purchases like it's different. It's only SP 500 stocks too, by the way. But yeah, for here, I'd say definitely Charles Schwab. I mean, I love Vanguard, but I love Vanguard products, by the way. Just don't get me wrong there. Like they're I had a 401k with them, like my very first company I ever worked for, and I really loved Vanguard. And I wish like all the rest of the companies I ever worked for in the rest of my life, up until now, were all Vanguard, but they weren't. They're always through Fidelity, and Fidelity's the options were just they were shitty. It was never really good investment vehicles in there, in my opinion. So I was always partial to Vanguard, and I still am to this day. But as far as a broker is concerned, I don't think Vanguard's the place to be for what we're doing here, or even probably a dividend portfolio or anything like that.
yeah.
I mean, you can get Vanguard products in any other broker. I don't think you get the Admiral shares, but honestly, the Admiral shares aren't really worth much. They used to be a major benefit, but I don't think they're really much of a benefit anymore. Real men love cats. I heard that before. I had a girlfriend I dated one time, and her mom's like, "Find a guy that has a cat," and she was right. Honestly, there's certain things about guys that like cats, but I'm just tooting my own horn here, So, let's see here. Retire with options. That's an incredible return. Yeah, retire with options. Yeah, he literally prints a Tesla every freaking month. He slowed down, got sick and whatnot, but and he'll recover. I don't know. That's a tough freaking milestone to try to break every year. He's gonna try to transition to more coma money anyway.
Yeah.
See, is it good to do options trading? Yeah, I knew you were gonna ask that question. I knew you'd show up and ask that damn question. I'm gonna
Scroll
say what I
all the
said
way up.
last freaking. What's
Yeah,
that?
scroll all the way up. We talked about it.
No, I'm just gonna respond what I did last week. Fuck you. Okay, there we go. Yeah, let's see. How is 24% ROI on 200K really? How is it realistic? 2% is pretty easy to do. That's why. Um, I don't know how to answer that.
Yeah, we gave examples of 1%, so just double that.
Yeah. So my goal is that's $1,000 a week to make that, right? So if I put on, 13 to 1400 or something like that premium per week, then I should get there, right? Because I'm going to be buying back about a little bit of it, right? Honestly, the January, the February time frame, I wasn't doing that. I was just putting premium out, buying it back, put it on, buying it back, putting it on, buying it back at 50% profit. The market gave it to us though, right? The market went up, and then we got hit in the end of February, and now that doesn't work. So now we have to be more strategic about it. It's like it's a little bit tougher now. Yeah, I can still get to the 4%, excuse me, the $4,000 a month, but you gotta understand the January and February I made 6,000. Okay, so I can dial it back and still make 4. Hope that answers the question.
Yeah, it doesn't have to. You don't have to make 2% every single month.
No,
that's not.
If you make 3% the next month or 4%
exactly.
the next month,
exactly.
then it just all averages out. It would be nice to have a plan where it's just okay. I'm going to put this on, and it's going to get me exactly to $4,000 a month. No stress. I know the positions. It doesn't quite work like that.
It's a lot
unless you have a super big account.
It's a lot more volatile, to be honest.
If you have a big account like Randy's size, for example, and you want to make $4,000 a month, that's not 2%, right? So it's relative. If I want to make $1,000 a month off my $200,000 account, I can do that with ease, right? It's just when I can get safer. I can do it. I can get safer. I can go safer stock, ETFs, whatever. I don't have to be aggressive. I can make that $1,000 a month. But if I want to make, my goal of, $4,000, which is the what is that? That's 2%. Then I have to do some thinking. I did I did stock at the first. Yeah, I was getting right behind. Got caught in the tech. He got burned on Tesla a little bit. We cover Randy. Let's see here. It needs to 130 fans above. Not going to make it. What's that?
Mm-hmm.
Is that Apple?
Yeah, that's what she's saying. Needs to get to 130.
It needs 130 fans above, but it's not going to make it. Well, I don't know why it needs to get there though. The more it drops, the more puts I'll put on it.
Maybe she
It's
bought
not
a
gonna
call.
drop. She bought a call?
Maybe.
I don't know. That's on Apple. What'd you do on Apple? What'd you do? Sorry, that always comes to my mind. I love that scene. Let's see.
Yes.
Join my Discord for discussion of trade. Yeah. Let me get the link to that. Well, that's not an easy link to get. I should have had it ahead beforehand. Let me get the link to Randy's Discord because it's like free. You don't got to pay or anything. We're all in there. You can ask questions and stuff and all that. During the week, you can join the Thursday night chat in there and stuff that we do. Ask questions in there. So let me see. Welcome. Let's see. It's doing this one. Invite people. Copy. Let's see. Where is that, Gerry?
You have to make sure to change it to invite all or something like that.
This is the welcome. So let me know if that doesn't work, people. Let's see here. With options, sorry, I don't understand what you mean by stock.
Well, what retire with options means is that he was trading stock in the first of the year, and then he went to cash carry puts. Most options traders have zero desire to own any stock whatsoever.
Correct. I have zero desire to own any. He was trying to own stock and day trade and do all the normal things that people do. Like I just talked about my dividend portfolio video, penny stocks, SPACs, and he decided to, take the bull by the horns and take control of his life and his retirement by putting the odds in his favor. Okay. When's the last time I mentioned that one, huh? We can be right, we can be wrong. The market trades sideways, down, up. It doesn't matter. We still make money because unless it goes down too far, right? Because we're the casino. We're selling premium. We're premium sellers. The odds are in your favor. If you're buying that premium, you're an options buyer. Those odds are out of your favor. You're going to most likely lose money. Let's see. It sounds like a second life, half-life. That sounds like I don't know what she's talking about. Digital real estate. Yeah, NFTs. NREs. Let's see here. Actually owning the stock and not trading the option. Yeah, okay. Trying to get the bottom here. Let's see. Awesome stream. Is she getting out? She counting sheep?
Can't be bedtime.
Probably past her bedtime. Let's see. I own Tesla and tanked. Was my major loss. Yeah. I mean, you would hold it, it would come back up. You could probably actually sell covered calls probably on it too, or average down. You'd probably be fine. See, that's the great thing about Tesla. Tesla's not going to go anywhere. Plus, it's most likely to bounce anyway. When you guys sell T puts, how many weeks till expiration? I think with those, we're doing like 30s or something, 30 DTs.
Yeah, I do 30 DTEs, and I'll usually sell between 2 and 4.
2 and 4
contracts.
Weeks?
2 and 4 contracts. Yeah, 2 to 4 contracts.
So pretty much 30 days DT on T. Makes sense because that's not really it's not a big mover. Thank you, David Gerry, for president and VP. Yeah, I'll be the VP, of course. I have 2 months under my belt selling CCs. Thanks to your inspiration and live streams. Thanks, Dave and Gerry. Let us know what stocks you decided to do it on. What cover call stocks. What are you doing? ETFs? You doing single stocks? Let us know. I like to hear success stories like that. I have both, but they both. I was gonna say chunky, but clunky. They both clunky. What we were talking about. Let's see. Oh,
Apple.
Maybe she has both Vanguard and Charles Schwab.
Oh, yes,
I would
yes,
say,
yes.
let me just say this about Charles Schwab. Their app's a piece of shit compared to a lot of other apps I've used. It's not really good for options. It's like almost like options like or the redheaded stepchild of the app. Like they threw it in there as an afterthought or something like that. It'll get down and dirty. You can get it done in there, but you should be using. So yeah, God, maybe you can comment on this too. But Charles Schwab's not good for options all around. It's just not the website's it's tough, and the app's no better. So for options like what I'm doing every day, what Gerry and I are doing every day for making like good income, you need like a fat client, a real broker, like Interactive Brokers. Now, could you do that in, Street Smart Edge? Maybe. I'm using Linux, so it's kind of slow. It's using Citrix. But TD Ameritrade, Thinkorswim is an amazing platform. You could use that. Their app is a little bit better, but I just want to put that out there. If you're doing covered calls, occasionally, then you can get by with Schwab with doing that. But what about the Fidelity apps there for options?
I'll agree with you there. If you're doing an occasional cash to carry put, an occasional covered call, your web broker will probably be just fine. But if you're trying to do like us and you're doing high volume stuff and you're wanting to put stuff off right away or buy some stuff back right away, having that fat client of Trader Workstation on IB, it's right now. Everything is live. It's happening. On a web platform, you don't get to see that. You don't really know what's going on. You're kind of blind in a sense. So Fidelity is the same. Fidelity has an Active Trader Pro. I never really got into it. I got into Interactive Brokers, and it was easy for me to get into Interactive Brokers because Dave was in it, and Dave made some videos about how to set it up and all that. So it was easier for me to learn knowing that I had someone to ask a question to, because I knew nobody using Fidelity Active Trader Pro. So I'd be off in left field, not knowing really what's going on, and David would be talking about something, and I'd be like, I don't know what you're talking about. It's not on my platform. So it was super easy for me to just say, okay, I'm going to Interactive Brokers. I've learned it. I still have Fidelity Active Pro. I'll pull it up once in a while. I'll look at it and I'll go, what the heck am I looking at?
Yeah.
So if you're
change pretty much look the same everywhere, but
yeah, if you're wanting to be involved, the web-based, options arena is not the way to go.
I've been saying this for ever since I started my channel. I'm like, if you're a day trader, you can't day trade from a phone. You shouldn't be day trading from a phone. You need to have a fat client on your desktop, okay? Because there's a lot of shit going on. You want to be successful. And so I treat the options the same way. I'm not even day trading these. I want to see what's going on. I want to be able to get an informed decision, right? The worst case scenario, I'll use a phone to take something off in a pinch, but is exactly what Gerry said. Charles Schwab has something called Street Smart Edge, which is their fat client. I don't know anybody that uses it. And, I've used Toss. Toss is an amazing platform. But TD Ameritrade is going to get sucked into Schwab. Well, guess what? Maybe. I have it on good, authority, right? I don't really, but that Schwab will let you use Toss with the existing accounts once they bring it over. So that's a plus. So all the Schwab users, you're going to have Toss available to you eventually, hopefully. So keep that going forward if you want to open a broker. If you want to day trade and, do something like that, or you want to do options like what we're doing, IB is the way to go, honestly. I'm not going to lie. I've been using IB for how many years now, Gerry? Like 9-10 years?
Yeah, something like that.
Yeah, it's been close. It's
like I know.
Well, I mention it in every video, so yeah, what happened to my freaking There it goes. Laughing at us as far as every week. Okay. Just, what the hell's going on my camera all of a sudden? We're going to get this shut down. I'm just trying to get through the last portion of these now. It's actually news, though. I got to put sign Palantir. Yeah, Palantir. We'll be doing CC. You know what? I think Neo's even worse than Palantir, but Palantir's, I just give it I just give it shit because of Mad Money, but it's actually a decent stock. I'm going to be into dividends. Is okay, Gerry, this is perfect for you.
Safe is relative. So, I mean, what do you mean by safe?
Yeah.
If you're looking for safety, which means would be capital preservation and protection, NUSI would be more of a safe capital preservation type because they have that protective put capping the downside. Now, people have been hitting me up lately because it's been going down, and they're like, hey, how come the downside protection is not kicking in? Well, it's only down 5%. That's nothing. You're going to kick in. NUSI will probably kick in around the 10% area and below. You're talking about a crash. Then NUSI can kick in and protect you from going down any further. QYLD has no safeguard of that whatsoever. So if the NASDAQ goes down 30%, expect QYLD to follow it.
None of those do, though. Like JEP, none of them are called except NUSI.
Except NUSI.
So let me also talk about this with NUSI because they just opened the whole new set of Aprils on Friday. My guess is that they did it like midday or early. I don't know when they did it. They did it sometime because they got a better price than what I saw. But they gave it a 5% move down from where it's at now. Okay, so let's let you know, NUSI, like that 10% thing is month to month. I mean, of course, it's 5% now. So that's 5% down more than it can go down, which already had a drop, right? So it resets every month. People think that just because they buy NUSI, that okay, we're down, 7%. It's only go down 3% more. No, it resets every month.
Right.
But that said, they had it set for 4.5%, or roughly about 4.5-5% last month, and then they have it 5% this month the next expiration going forward. So it's even safer than that 10% than we originally thought. But I mean, has it really worked like that? I mean, it's hard to say.
Well, NUSI, I would say, protects you from a sudden crash. Yeah. It protects you from a March 2020.
Yes.
Other than that, I mean, if NASDAQ goes down 4 or 5%, you're going with it.
And it does that every single month, unless they make some sort of change to the strategy, then you're going to go down 4% every single month too.
Yes.
Okay.
But you will get your dividend payment though.
Yes. Yeah. And then it is what it is. So it doesn't protect you, I don't know. It doesn't protect you probably like how you thought it would, right? It'll protect you from a March 2020, but it's not going to protect you if the market's in a bear market going down month after month. So that's good note. Good information. Second life of the virtual. Yeah. Second life of that. Yeah, I know. That was fascinating actually. I'm not going to buy anything, but how often do you each get assigned? We're in a no assignment strategy. Are you worried about Tesla tanking? No, I'm not, because I don't think. I mean, the lower Tesla goes, the less I'm worried about it. So, because I think that's getting to the point where people are just going to BTFD it. Are you doing another to protect yourself? Are you doing anything? No, I'm not.
No.
Yeah, not running a call or anything on that. Let's see, what do we got here? I'm selling CC on, so Bank of America. Now starting PFE and T. Okay, so yeah, those are some really good ones to do CCs on. I don't think they pay very much, but it definitely gets you started, right?
Yeah, it'll get you the experience. It'll get you the mechanics of it. And I think those are great ones to start out with.
Yep. All right, we're down near the end here. We're going to close this some bitch out. It's been 2 hours and 40 freaking minutes, Gerry. If you didn't buy back your CSPs at 50% profit, I would guess your income and ROI from your options would go down to half of what it is. If you no, depends. If the market's going up, then you buy it back. You just put a whole new set on. You'd buy those back.
Yeah.
It depends on what the market's doing. Yeah. Is that what I understand that one right, Gerry?
I think so.
I use it as okay. So I'm assuming Bobby here is probably talking about maybe Street Smart Edge or something like that. Yeah. You don't use that. Yeah, I don't use it. I mean, I did a video on it. If you want to look at it, look at the video I did on it. You want to see what it looks like. I'm using Linux, so Citrix was just way too choppy and slow for me. They don't have a Linux fat client. Well, guess what? TD Ameritrade's, TOS, and TWS, they actually have Linux versions. I have heard that selling puts on highly liquid stocks or ETFs is better than illiquid stocks and ETFs. Yeah, what does that mean, Gerry?
It just means that there's a lot of buyers and sellers. If you don't have a lot of buyers and sellers in that stock, you could be stuck in it. So
yeah,
you won't be able to exit the position if there's nobody there to buy it or to sell it to. So that's really what it is. Highly liquid stocks, you can get in, you can get out. Illiquid stocks, you could be stuck there with nobody to, sell it to. Or, yeah.
Spread could be big too.
And the spread could be huge. So
thanks for your time every Sunday with these live streams. Absolutely. And I love that cat. Look at that little cat. Oh my God.
Purr.
Yeah, Dave and Gerry, you guys are awesome, excellent duo. Mostly it's just Gerry. We can't thank you enough for taking the time to share your wealth of knowledge with us. That's what really this is all about. We like sharing this stuff. We're not experts, but we might probably have more experience than most people. But at least joining this, I'll be here for next stream. God bless. All right, people, we'll close it down here before anybody else sneaks something else in, like Cody or something. So, all right, people, let's have a great week. Let's kill it. Let's smash it, and we'll see you next week. Per.